Hello, my Teaserking family. Today we talk economics, as promised. I can eat. It's 11:30. All right, I found this video on the reset from a Swiss banker who explains it really well. Basically, we're all fucked. We have to get rid of our dollars in any fiat currency. And I'm going to play some videos, so maybe that'll explain it better. But what's happening is they're going to come out with a new currency. I don't know how they're going to come out with this central bank digital currency. I went to my restaurant where I do my we talked silver and gold with the guy. So I was there yesterday and I asked him point blank, did they come out as soon as I eat something, did they come out with a new credit card for you, or whatever the CBDC is, or however they're going to make it? God almighty, I can't. Excuse me. I don't know what it is about this table. As soon as I sit here. Oh, I got to show you something too. So the first thing first, as we know, I'm hacking. This is what you want to use. It's a dropper, and you pour it in with a tiny bit of water, and you drink it. And like 3 times a day, it's a liquid. It's great for the nasal infection, the throat, hacking, any of this stuff where you're having sinus problems. You take this, and this will get rid of it. I just took it last night. I just took some more this morning. So far, so good. It's just the user. Mullen T, big fan of it. Oh, okay, good. Yep, there we go. Bobby, what's up, Howard? Glad to be back in economics class. Well, I got some videos to show you from a video I saw. And let me give you the name of it. Hold on.
Deposit had to be loaned to the government apart from $1,200.
Okay, this is the video. So this video you need to watch. I'm going to give you clips of this video. This is a Swiss banker explaining the reset. So the high points are, what he's saying is, if you have fiat money, which is what this is. This is called fiat money. Gold and silver are the only real money. This is going away. It's going to be replaced. I don't know how with the central bank digital currency. It doesn't really make sense, but eventually, soon, there's one on here that he says it's 5 minutes to midnight, and he says that's about where it is with the banking. So, let me play some videos first, then we can discuss it.
And the reason they get this wrong is when we get to this currency reset, we mustn't forget that half the wealth on the planet will not be deployable. We're talking about the cash deposits, the bonds, it'll be worthless. When that happens, people will be forced to rebalance their portfolios. They'll be selling assets to get the new CBDC. That does the new currency, the price of everything will be lower than it is today.
I see. And I agree with you. Being out of anything that's denominated like a bond, government bond, and cash in the bank, that's the worst thing to have in a reset. I remember in Brazil, I lived in Brazil, and in the late 80s, they had a reset. And my uncle, he bought a property, and luckily he exchanged the contract on a certain day, so he paid the owner. And then the next day they did a reset, and the guy who sold the property, he was basically wiped out. And my uncle luckily had the property. So what else?
Some people get the sound wrong, and the reason they get the sound wrong is when we get to this.
So what he's saying is you've got to own you. If you own regular money, you're fucked because nobody is going to accept it. So money in the bank, you're fucked. Especially you, Bobby. If you have $100 grand or more in the bank, you're totally fucked because they're going to say, well, you can't exchange it. So let's say you have kids and they have 10 grand in the bank. They'll be okay. What'll happen is they'll be able to switch it from the fiat money to the new money. They'll allow small amounts of that. Anybody with a lot of money, 100,000 or more, are going to be fucked because they're going to say, well, you can exchange it, but not now. And as the guy will tell you, it means you'll never be able to exchange it. And basically, they're just wiping out the fiat currency. They're going to wipe out the debt. So good news, your mortgage will go to zero. Your credit cards will go to zero. But your money will go to zero. So you're going to sell assets so you can get the new currency. That's where gold and silver and baseball cards come into play. I can sell my Mano card, but if I sell it now and I got the fiat currency, I'm fucked because that money is going to be worthless. But if I hold on to it and sell it once it's converted over, then I'm fine. I'll get the new currency, and that'll be good. So that's what this whole thing's about. There's so much debt. Well, we'll listen to other videos, but the case in point is you have to get out of fiat currency. You have to get into gold and silver. You have to get out of bonds. Even stocks, you're fucked because the company will be there, but it'll all be in, well, I think you can trade that in. You might be okay in stocks, but you don't want to be in bonds and you don't want to be anything with the fiat currency. So if you have, Microsoft stock, it'll get converted to the new current. You have to get it converted to the new currency. If you're in the old currency, it'll be worthless. So your credit card goes to zero, so you'll be fine. I've been talking about the switch to CBDC for a while now, Professor. They have been studying how to roll it out for years now. Well, okay, so let's go back to the restaurant. So I'm at the restaurant yesterday, and I go, have they told you anything about the CBDC? Because you're going to have to change your prices on your menu. You're going to have to accept it. Like, how am I going to pay my bill? I can't use my debit or credit card. I can't even give you cash because it's all going to be worthless. He says, no, not yet. I am expecting to get stuff on it, but I haven't gotten anything yet. I think we're good till the end of the year. Hopefully. This is something that's going to happen in 2023, I believe. I just moved 30 grand out of my retirement account. It's going to go to my bank probably in a day or two. I'm going to take it out of the bank because the banks will not give you your money. When the shit hits the fan, you're fucked if you got any money. If you got more than like 5-10 grand in the bank, it'll be closed. You're not going to be able to get your money out. So don't just leave. I just leave enough for my rent and my, I still have to pay my credit card payments until the reset. Then it'll all be zero and your mortgage will all be zero. and they're not going to transfer it over because they don't want the old fiat currency. So you're in the free. So if you owe 50 grand on your credit card, it's gone. It's zero. So stock up now on your credit card, boys, because it's going to go to zero. The question is, when does the reset happen? Then asking the guy at the restaurant, well, what are we going to do? Is there going to be money? Is it going to be, how do I get my money in and out of it? So if I get paid on PayPal for Teaser King, right now it goes into my Chase account, right? And that's where I have my money, and I can go to the Chase and pull it out. Like when I get this 30 grand, I'm going to go pull it out. Now I probably won't be able to pull out 30 grand at once. I'll pull out 15 grand and 10 grand and leave 5 grand in. That's what I think will happen. I will be able to get it out. And then I buy a little gold, and then here's where I got to juggle. I still need the money to pay the rent and everything else on one hand. On the other hand, there's a point where I got to get rid of it, because when gold and silver go to the moon, I won't be able to really afford it. Maybe silver I can afford. So that's where I'm in a catch-22. How much do I leave in the safe and for how long? But if I take it all for gold, then how do I pay my rent? So I don't want to sell my gold. My girlfriend keeps asking me for money. She says, I am not selling an ounce of gold for $1,800. That's going to be worth $50,000 when it hits $50,000. But now I can't even sell it at 50 until they reset, and then the CBFC or whatever, and however they're going to do it. Once they do that, then I can sell it in that currency. So you don't want to sell anything in fiat currency. You don't want to get it. And you just heard the guy telling him he bought a house, and the next day they reset, and then the guy got fucked who we sold the house to, or who he paid for the house. The money was worthless, but he had the house. So you want your assets, your gold, your silver, your diamonds, your baseball cards, your Rolexes, anything that's an asset you want, especially gold and silver. And you need to get out of fiat money. If you're in bonds, get the fuck out. Most portfolio managers have their clients 60% stock, 40% bonds. You're going to get fucked out of your 40%. Your 60%, again, I got to hear a little bit more, and I don't want to guide you wrong. I think if you own Microsoft and you have it, I think it gets converted over. You just don't want to be in fiat, right? So you don't want to be in a bond, and you don't want to be in dollars. You're fucked. You're going to be good in mortgage. You're going to be good in credit card, but you're not going to have any money, or you need to That's why you buy the gold. Then you take the gold and you sell the gold for the new currency, and you're fine. And for the amount of money the gold's going to be worth, that's basically all you need to do. You should be fine, but you will be selling your assets. Now, that's why I didn't buy a house, because my asset's going to go down in value. So I'm waiting for people to be forced to sell their houses. And then we walk in, as Eddie Murphy did in Trading Places, and I go, here's a coin, here's a gold ounce. I want your house. The guy has no choice, because the guy needs money. He doesn't, even though he doesn't own on the mortgage, he doesn't have any CBFC money. So the key is to get out of the fiat and into the CBFC. That's where you're trying to get to. And that's the hard part. So again, the guy at the restaurant, he's trying to buy gold. He's going to our gold store, Bobby, but he won't. The guy doesn't have any. So I says, I'll go. Give me your phone number. So he gave me his phone number. I says, when I go, if they have gold, I'll tell them to hold it. I'll call you, and then you got to get here. Or I could buy it for you on my credit card, and then you got to pay me back for it like the same day. I'm not going to be out money buying somebody else gold. It will probably coincide with UBI, Universal Basic Income. What's that? Universal Basic Income. I mean, what's happening is they'll pay off the debt, so the government debt will go away, because that currency won't exist. And this is the whole world. Now, maybe what BRICS is doing is saying, we're not going to get fucked. our currency will be backed by gold and be useful. And I got to do more research on that. So let's go to video number 2.
New Zealand, that's a $5 coin. It's made of solid silver. It's worth about $20 for the silver, but I paid maybe $40 or $50 for it. I think 5 minutes to midnight is very telling, because I think that's where the world's financial system is. It's as near as it can possibly be to the end of the current state, and it's time for a reset. All the big institutions like the World Bank and the IMF are talking about debt forgiveness. Well, debt forgiveness is basically means don't pay, or debt restructuring, don't pay. So I think that's where we are, and I think 2024, 2023 will be years where this is quite likely to happen. I don't know which year, but I think it's very, very close.
Yeah, and
so my
go ahead. Your advice.
My advice is, from the wealth management point of view, stay diversified, but minimize your exposure to bonds, minimize your exposure to fiat, and increase your exposure to other things. And obviously gold and silver would feature in those other things. And I'm not going to say a figure or percentage of what's right for each individual. But I think there's one important thing I'd like to add, because at some point people get to say I'm wrong. And the reason they get to say I'm wrong is when we get to this currency reset, we mustn't forget that half the wealth on the planet will not be deployable. We're talking about the cash deposits, the bonds. It'll be worthless. When that happens, people will be forced to rebalance their portfolios. They'll be selling assets to get the new CBDC. That does mean that in the new currency, the price of everything will be lower than it is today.
I see.
Okay, so that's what I'm just trying to reaffirm what I'm telling you. So that's really it. So that's why you buy the gold and silver, because they are money and they are assets. So basically, they're just saying, forget the dollar. You know what? We're gonna get rid of this. We're coming up with a new currency. Now, Nazi Germany 1930, what did they do? They did hyperinflation, and they were wallpapering their rooms with the currency because it was worthless. So that's how Hitler came to power, because he promised I'll fix the economy. And then really what World War II is about is him going to all the countries stealing the gold. That's why he went to all the countries, Czechoslovakia, Poland. He went right to the banks, took the gold, sent it back to Germany. He did it in France. I think some of the countries, that's why it ended up in the U.S., some of the countries said, well, fuck, before Hitler comes and takes our gold, we're sending it to New York or the Fed. That's why when you see the movie Die Hard 3 and they're in the Fed and you see all these different countries with their gold bars, that's what it's from, is from World War II. They didn't want Hitler to get it, so they did it. But Hitler was just mafia who basically said, let's make a diversion and I'll go. This is all about a gold robbery, but I need an army. So he went in. And the reason he blitzkrieged was because he didn't have the time or the money or the resources, the army, to have a slow war. So he had to rush in because he could only, if he didn't take it in a week, he couldn't take it. He couldn't get into a long war. That's why he couldn't win in Russia. And I was thinking about that. And my thing about Russia is what's happening in the U.S., they're not trying to take us by force. They're trying to get us from the inside out. So they're in our government. Biden's listening to the Chinese. All the politicians are paid for by Soros and China. And so they're coming in the middle. And that's how I would have taken Russia. You can't. It's too big. Do you see how big this fucking country is? You couldn't possibly invade it all. Maybe you could take Moscow and St. Petersburg. Maybe you could do that. but you have to get it from the middle. So you have to infiltrate the government like China's doing here. And that's how you then you whatever you want, you take because you run the government. And that's what Russia does a lot now is they get involved with other governments and they take like Belarus. Well, it's really Russia. It's run by a Putin guy. So anyway, that's what that is. So that's the importance of gold and silver. And I don't know, they're really, not only they're not telling anybody, well, maybe if I watch this obscure channel on YouTube, I get this, here's the reset coming, and it's to get out of debt. But supposedly it'll be even money. So maybe 20, 30,000, you'll be able to exchange for the CBFC or CBDC, whatever it is. You'll be able to exchange it and get that money. I assume if you're relying on Social Security, you'll get that switched, I guess. The costs go down because the price of everything priced in dollars goes up. As I've explained, the more you print, the less it's worth. That's why gold and silver should be much, much higher. And very soon they're going to go through the roof. My guess is January, once the derivatives are done, you're going to see gold and silver go very high. So if you do not buy it now, you are not, it's not like this shirt where, you know what, I'll go in January and I'll go to, Saks and buy this shirt. And you're lucky to find it. And what price are you going to pay? Now, talking to the rib guy yesterday, the barbecue guy, it's a barbecue restaurant. He says he can't even get it. Like the guy sold out at the coin store. He'll get gold. He wants to buy gold. He says the only time the guy gets gold is when somebody sells it to him. And I go, this person's going to kill themselves because they're getting 1,800 for the ounce of gold. That's going to be worth 50,000. And they're going to be like, oh, geez, why did I sell now? If I waited a month, I'd get 50,000 for it. And that's what's happening. So he can't even, I'll go to the coin store after this. I can probably find the silver, but I don't think I can find the gold. And he was even raising the silver price. Like the U.S. Eagle's been 35. I think he's moving it up to 40. I still laugh at him going, this is a $2,000 an ounce of silver. If you want to sell it to me $35, that's all I can eat. So that's what's happening. So it's not like you can wait and in February or March, oh, here's the reset. Oh shit, I need to buy gold and silver. And then the guy will just have this inventory of gold and silver and here's 1,800 or here's $35. It's going to be so much more if he even has any. Phil, to find the good videos, I usually have to go to Odessa or Odyssey or Rumble or BitChute. YouTube censorship is out of control nowadays. Yeah, I stumbled onto this in YouTube. Mostly I get the idiots, and that's probably why I call them idiots, because they probably can only say so much. I'm so obscure that I can say whatever I want, and they're not. First of all, I come across as a handicapper, so they're not. When I start talking economics, I don't even show up on their radar. But I agree with you. But this guy's good, and I know a lot about it myself. The biggest question is, how are they going to do it? So am I going to be able to get this in CBFC, CBDC? Is it all going to be digital? What do I do? So my money is going to go disappear. And so if I have 10 grand in the bank, they switch it in the bank. It's still going to be Chase. And I'll have 10 grand now in the digital currency that I can use to pay my bills. Is that what's going to happen? So this is what we don't know. Are we not going to have money? Keep in mind, this is a medium of exchange. This is based on if I want to give a tip to a guy. So you're at Caesar's Palace and you want to tip the guy for bringing up your luggage. How do you tip him? Wait, here's digital. I'm going to give you $10 of digital currency. How? Oh, give me your email and I'll email it to you on PayPal. Or is PayPal going to change? Do I need to not take PayPal anymore? Or is PayPal going to go to the digital currency? This I don't know. And then, so we have to understand the value of everything. If this is $50 US fiat, how much is it in digital currency? $10? Now, most importantly, if the digital currency is not backed by gold or silver, it's going to go and do the same thing again. They're just going to print it, and it's going to go to zero. So be careful with how they back it. And that's why BRICS countries are backing it by commodities, gold and silver, because they want to have the good currency, which this is the beauty of competition, which we'll get into when we get into class. Competition forces, so by Russia, China doing this currency backed by gold, forces the US to come out with their currency backed by gold, because nobody will want it. Nobody wants it now anyway, but nobody's going to want it. So that's when the shit hits the fan at the end, is nobody will want the US dollar. And that is going to be how they introduce the CBDCs. They're going to say, well, we have this alternate dollar here. And by the way, so we're going to give everybody 5,000 or 10,000, what the guy says. So we're going to give that to everybody. And you're going to, we can start you with some money, because nobody has it, right? So you've got to have assets to sell to get the new currency. But so how are people going to get the currency in the first place? That's the question. So if I have gold to sell, I got to find somebody who has whatever in the new currency it is. Now, keep in mind, the prices will be lower. So if gas is $4 a gallon now, it'll probably be $1. So you won't need as much of the new currency to buy what you buy now. Your food will drop from $100 to $10. That's what'll happen. That's what's being reset. And you won't own a mortgage and you won't own a credit card, so you'll have more money to spend. Figuring out how to get the money is going to be the issue. Bobby, yeah. Like that lady that you mentioned yesterday that went to Coin Store attempting to sell her gold. Yeah, well, she did sell it. The guys had, tickets for $1,800. But the store itself, I don't understand. If I had people giving me gold, it'd be in the safe. I wouldn't put it out to resell. And that might be what they're doing. Now, just because they run a gold store, does that mean they're Austrian economists that understand what's going on? Because when I go in, I don't get the clue. They have a clue. This is our business. We buy and sell it. We buy it for 100. We sell it for 150. That's how they keep the lights on, and that's what they do. And I'm not sure they get what's happening. I'm not sure they understand Austrian economics. When I go in and tell them, I don't think they get it. But as long as I do, that's all I care about. And I was fine. As long as you have inventory to sell, I'll buy it. So the key is not to sell it at 1,800. Just wait a few months. It's really 5 minutes to midnight, as the guy said. So be careful with that unless it's do or die. That's why it's a juggling act. So you got your money in your IRA or your stocks. So you got to sell that and the stocks you might be okay. But bonds or cash, you got to get out. So you kind of move it out of the bank, because the bank, if you have 100 grand in the bank, it won't be there. You can probably keep 5 or 10 grand. I'm not sure. But then they'll exchange the money. So if you keep money in the safe and then the shit hits the fan, you should be able to exchange it a little bit a month. Here's 5 grand, give me 5 grand digital. I'm believing that's what will happen, but I'm not sure. I don't think there'll be cash, which really doesn't make sense. What if your phone dies? What if the internet goes and there's no electricity? How do you get your digital dollars to work? What are you going to do there? I know I have my rent payment. It's due on the 1st. It's due tomorrow. What's my rent going to be with the new digital currency? It's not going to be what it is now. And then I have to do it. So that's why you need the assets to sell. But who are we going to sell it to? Who's going to have 50,000 to buy an ounce of gold? That needs to be sorted out, that's what you're saying, Phil, is they work the kinks out. Plus, Are we still going to have Chase and Wells Fargo do we run to the bank? I still run to the bank for money when I want to buy gold. He only wants cash. I mean, mostly. And what if I want cash? I mean, what if I want to go play poker or take a girl out? I'm going to give her money. I'm not, oh, give me your email so I can digitally send you money. I mean, you want cash for something. In China, they will actually charge you a fee if your phone goes dead. So it will be up to you to keep your phone charged. What if there's no electricity? Then what are you going to do? See, we're assuming everything keeps working the way it is. Now, what this guy says after that, and they've relieved all the debt, and now we don't own the mortgage and we don't owe the credit cards, we don't owe the car payments. We'll have a lot more money to spend. He says, it should be a very good economic time after that, which you can see is why they're in such debt, they can't get out of it. So that's one of the reasons they want to reset it. However, I don't understand fucking the guy with a lot of money. Sorry, you can only get a limited amount. You can only exchange a limited amount. You'll do it later. And as the guy said, later will never happen. So you can't assume if you've got, I don't even know what a LeBron James would do. Tiger Woods, what are they going to do? I mean, they can't. I mean, if I was them, I'd be buying as much gold and Rolexes and baseball cards as I could because they're fucked. I mean, maybe if they have it in stocks, they're okay. And maybe that's why that's why the stock market's still going up, even though the stocks themselves will drop. But if you are in stocks, then I think that's transferable, and that I need to research. So don't quote me on that. The bonds and the dollars, you're definitely fucked. The guy makes a comment about stocks. Let's go to another clip and see if I can figure out which one it is. So I'm going to go to this clip. And bear with.
The likes of which we saw back in the 1950s when America was pumping money into the whole world.
And some people might say, what if they turn your old debt into the new CBDC? If they want to make an exchange when you have your mortgage in CBDC, you don't think they'll do that. That would defeat the purpose.
Well, that would be, because that would mean that the asset holder has CBDCs, which you can spend, and we mustn't forget that the prices will be arising because people are panicking about the currency. They're trying to get rid of the old currency. If you convert all the old currency and therefore all the old bonds and all the liabilities and assets into the new currency, you're just converting old pounds for new pounds, and it's the same thing. So, no, I think the whole idea
is sorry, you're not solving the problem then, yeah? So
I believe that monetary assets, fiat-denominated assets, will, to a large extent, remain in the old currency and not be converted. But they don't want a riot on their hands, so of course they're going to convert everything that the small guy owns. And the small guy will be okay, but the government's going to decide who wins and who loses. I guess it's not going to be the wealthy, and I guess it's not going to be the foreign governments, but I guess it's not going to be the foreigners.
And do you worry about the fact that they're talking about programming CBDCs? I mean, that's the tyrannical part of it.
I think if they do this, it's inevitably going to be programmable, whether we like it or not. All I can say is I'm very happy to live here in Switzerland because nothing can happen in Switzerland without a referendum. I mean, we literally vote on pointless things like Doctor Who or what day you can hang your washing hat. We also vote on very important things like taxes and foreigners and employment laws. But there's no way that CBDC could come into Switzerland without a referendum, and I can guarantee the Swiss population will vote against it.
Yeah, it's interesting. And
so we need to move to Switzerland, where they'll be safe there. Let's see. I got one more clip, and then I got a long clip, but I'll play that later.
And my view is you should some outliers with much more, but the typical investor had less than 3%. I think that figure is going to go up a lot as people look for an alternative to the bond market, because after all, silver is money, always has been, and gold is money, always has been. And it's just for the last 50, 60 years that it's been technically replaced by the dollar, at least until 1971, and then by nothing at all.
Great.
All right, so for you people worrying about silver, you better have solar or silver. Why solar? There's not going to be electricity, or is that our energy, or because silver is needed for solar, and there's not enough silver to produce all the solar and all the electric batteries. But anyway, that shows you this is an investment manager, a finance manager. So he's like a banker in Switzerland. So he's saying nobody has gold and silver, but they are money, and you need to buy it. And once you see, people haven't realized that the whole system's crashing, and they haven't realized that the fiat money is being heavily inflated. Half of them don't even know what inflation is, or what does the government say? Oh, it'll be back to 2%, which will never happen. And they don't even understand what it is. They think it's prices. So they don't get, so where are they going for safe haven? And this is where we have a duo of economists. There's me, the Austrian, and then there's the communists, which are the Keynesians. And right now the Keynesians run all the portfolios for some reason in America, and they've got everybody in stocks and bonds. And that's what's pushing it. Where me, I'm going, wait, it's not working. And they're not putting people in gold and silver. They're keeping people in stocks and bonds. Well, as the bonds collapse, because the fiat money is collapsing, they'll get out of that once they realize it. And then they start buying gold and silver, because that's it. There's nothing left of it. Phil, they don't care, professors. My point, it will be your problem, not theirs. Why do I need solar, though, Phil? They're going full speed ahead on EV cars. Where is that electricity going to come from? They don't know, nor do they give a damn. I don't even get it, because you got a pretty pissed off Russia and a pretty pissed off Saudi Arabia who has all this oil. And now you're saying, well, we're not going to use oil anymore. Plus, there's not enough silver to make the batteries for the electric cars. Now, I've done something on what's called Say's Law, which is where I say, I want a green shirt and you make one. Nobody's saying I want an electric car. They're trying to go around this is communism. They're trying to say, we're making electric cars. You need to buy one. And that's what you must own. Well, Austrian economics is about freedom. I want a green shirt. Boom, he made it. I got it. I want a blue shirt. Boom, he makes. And everybody, and it's about competition. It's about the invisible hand, which says, just let the people do it. We don't need government's involvement. That's the invisible hand. Keep government the fuck out. Stay away from monopolies. Have good laws and good money. That's the kind of world we all have been living in and want to live in, not the government saying, you got to buy electric cars and you can't say this and you can't say that. And you're a racist and you're a this and that and whatever other bullshit they come out with. I was watching the indie highlights, and their end zone says end racism. Oh, so if you put a little thing in the end zone, that's going to end it? How does that? 2 and 2 doesn't make 4 over there. There shouldn't be any, and you won't have any. If you're on the gold standard and you have Austrian economics and the invisible hand, there's no such thing as racism, because I don't care who buys from me. Black, red, yellow, pink, green. I don't care the hair. I don't care who they're screwing. If you got money to buy my product, I thank you very much. I don't care. That's the whole key to it. You don't have this, and that's why. But they don't want to be on the gold standard. But look what's happening with the BRICS countries backing by gold are now on the gold standard, which is going to force the U.S. to compete. Again, competition, saving the day, them to come out with dollar backed by gold, which then you don't have all this trade cycle. You don't have the inflation. You don't have all this craziness going on, all these government kickbacks, lobbyists, the whole thing goes away and it's nice and clean. Everything's very fresh, no wars, no nothing. Just you want something, you buy it. Nobody, it's fine. Anybody can be my customer. I don't care. Yes, I agree. They are forcing it with no regard for logistics. It makes so little sense. It is more a control issue. Well, that's what they're trying to do. But the question is can they do it? That's the thing. It's a great plan. Let's fly to the Mars, but they can't do it. Flying to the moon, I don't believe really happened because there's radiation up there that would have killed the guy going to the moon. Why do you think they've never gone to the moon since? So they went once. Oh, okay, we did it. Well, let's not do it again. And it looks so fake. They're walking on the moon. There's shadows and there's things that say, hey, that moon rover was too small to actually have people in it. And there's a whole lot of stuff going on. But my point is, if you did it once, why aren't you doing it again? And that whole thing. So that's where I'm kind of like, I don't get it. I have one more. Well, all right. I'm going to show you this one other video from my favorite guy. This is the guy I always tell you about, Bobby.
It's not just keeping the banks open for business, but also stopping financial assets from sliding in value. That's going to require enough money printing to either destroy the currencies through quantity alone, or, more likely, destroy the credibility of the fiat currencies that they issue in order to try and support markets. And that, I think, is really where we're going with this. We are in a situation where the major banks are very highly leveraged. And when that happens and things start deteriorating in terms of the outlook as far as banks are concerned, then they start contracting their balance sheets. Now, the reason this matters is that GDP is actually it's just driven by bank credit. It is the spending of bank credit. The amount of cash spent, because you've got two elements of credit in the economy in terms of circulating media. You've got dollar notes and coin, which are token coin, they're not real coins. And you've got bank credit. And if you take out the overseas portion, funny enough, I was looking at the numbers this morning, you can pretty much halve the level of cash notes on the Fed's balance sheet as liabilities to arrive at a cash figure for the domestic US economy. Now, that being the case, then 5% of it is cash, 95% of it is bank credit. So, what happens when you get a contraction of bank credit? GDP contracts. Now, bank credit feeds not just GDP, but it also feeds the financial sector, the exchange of financial assets, the ability to hold on to financial assets. So it does two very, very important things. But if we concentrate on the GDP, on GDP for the moment, the contraction of bank credit, to take them back to more normal times, I think means that it should, in theory, mean that GDP contracts by something like 4, 5, maybe $6 trillion. Now that's a massive hit. That's a massive hit. But that is without anything happening from abroad, because we've got systemic risks from abroad as well. So
that was a little technical, where this is my other guy who's he used to be a director of a bank, so he really knows what's going on. I don't believe we've been to the moon either. Many reasons why are out there too. Well, I don't believe 9/11 was, I believe, a gold robbery. And the strange thing is the guy who owned the building took out terrorist insurance for like $1 billion a week before. And the whole floor that got hit, floor 101 or whatever, they were all off for they took a holiday or the whole company that was on floor 101 was not in the building that day. Just a coincidence, I guess. But there's a lot of shit that I don't know why anybody trusts the government. JFK clearly wasn't killed by one guy. Even Jesse Ventura proves, hey, the guy couldn't have shot, reloaded, shot again, changed angles. I mean, obviously there was CIA behind it, but half the shit the government tells us is a bunch of bullshit. And that's the problem. So they're coming out with this probably to get rid of debt. All they needed to do was go to gold and then put the currency to gold and they'd be fine. Is this a control issue where they're going to tell us you can't go to Switzerland? You can't fly. You can't go to Vegas. You want it? You want to eat here? I mean, I don't know. Oh, wait, you voted for Trump. You can't get it. I mean, this is the scary part about we're not in a republic anymore. We're in a communist country. That's why I went to Lisbon to look for houses. Like, fuck, I see what's going on. I don't want to be anywhere near there. So I'm not going to play the 8-minute one. I'm going to talk about the trade cycle real quickly. And you're going, what the hell is that? And I'm going to tell you what that is. Where's 1, 2, 3? Okay. 2, 4 through 15. Okay, so this was my final exam, was on the fiduciary credit inflation and the trade cycle. So only fiduciary credit can cause a trade cycle. Well, what the hell is the trade cycle? That's the cause and effects of these idiots raising and lowering the interest rates, because it should be at market. If you leave everything to competition and to the free market, Austrian economics, Adam Smith, you don't get any of this bullshit. Austrian theory of the trade cycle, the beginning of the trade cycle. So I will go slow and painless. It's the decision of the Fed to lower interest rates. Now, as I talk about action, reaction, or to get the outcome, what do I call it? I had to write it down because I never remember it. Expected outcome. So an expected outcome or action reaction is you do X and then Y happens. And you got to be able to think that through. So when the Fed lowers interest rates, what's going to happen, right? You're doing something which is going to create something else. It makes things cheaper because the interest rates are cost of money. So in the cost of money, interest rates are a big decision on whether to buy new products. So if the interest rates drop, you have more money. Investments from a business go up. And even you might buy a car or a house because interest rates are cheap. If the interest rates go up, the investments go down, which is what's happening now. This is all step one, right? Savings should go up because interest rates are higher. And let's see, investment goes up. If interest rates go up, savings drop and investments drop. Savings, the consumption buyer, so savings go up, the consumption goes down, and then savings drop, consumption goes up. So if you're putting money in the bank you save to use the money later because you think it'll be more valuable, or you don't want to spend it now, you'll spend it later. I mean, people in like Russia and Ukraine, you give them money, they spend it immediately. They don't trust the banks, but they won't put savings. That's why they go, my one friend goes, well, I know you got money. I go, yeah, but I'm not spending it now. I can't risk losing money and then having to sell gold at 1,800. So I need to keep the money. I need to keep the balance. I have enough for my bills and enough time to wait for gold to go through the moon. Okay. So that's step one. Fed lowers interest rates, makes money cheaper, spending goes up. Number two is an increase in the money supply. This is fiduciary credit inflation. Inflation goes up, money supply goes up. Where money is spent, gains, D gets hurt. So where the money goes, which is to the bankers, they do well. People that get hurt are people on fixed income, like retired, who live on I'm going to pay this much money around. All of a sudden, the money's lost value, and therefore they don't have it. They're the ones getting hurt unless they can get more income in. But the guy who gets, if I print money and I give it to you, you gain because you got the money before all the prices go up. But if you get the money after, now the prices are up, and now I'm getting this inflated money, so it hurts. Again, prices go up because the money is worth less. That's what they're doing when they increase the money supply. Number three, capital goods. Booms always start here. So the boom of the economy starts basically when they lower interest rates. There's going to be a boom. I probably want to buy stocks. The companies are going to buy because they can afford to. They're putting debt on their books, so it's going to come back to bite them. But at this point, it's cheap. I'll buy this, that, and the other. People are hired. People go to work, and the economy is booming. That's what happens. So you buy machinery. I did a thesis on how this affects the stock market. So when the prices go down, when the interest rates go down, you buy GM, Ford, you buy the cars, you buy Caterpillar, housing, anything that's affected by the interest rate. That's the companies in the stock market you buy because they're going to go up. People are going to buy houses and cars. Sales go up, profits go up, stock goes up. Very easy, fundamental to understand. Let's see. So construction boom, real estate, tools. All right, as I've just discussed. So we go to step, and the stock market boom. So everything I just said. Step 4, prices go up due to demand and the money supply. So if everybody's buying a Toyota, they're going to sell the Toyota for more because the demand creates it. So let's go to my Canadian Club. If everybody's buying Canadian Club, I'm going to raise the price because I got demand for it. With demand comes price increases because I got people to buy it. I've got the demand. When there's no demand, I lower the price. When I have demand, I raise it. That's what happens in a boom. More people have more money. They buy more things. That's what a boom is. But they're also increasing the money supply, which is going to be trouble down the road. Step 5, the Fed increases the money supply to keep the interest rates low. So the interest rate, the price of money has to stay low. So as demand's peaking, normally, what I just said, prices go up. But how does the Fed keep the interest rate low so people will keep buying? And that's what's happening. The Fed prints money. That's an automatic. All right, we'll print more money and interest rates stay low. Step 6, this is malinvestment. What the hell is malinvestment, Professor? It's investments that shouldn't be made. It's you buy a third car. You don't need it, but you buy it. You have money. You know what? I'm going to buy a third car. I don't need it, but I'm going to buy it. Or a company buys something that it's buying things you don't need. Just because you have money, you buy stuff you don't need. People invest in things they shouldn't. Okay, so I'm reading ahead of myself. Overbuilding, farm credit crisis, what happened? Over mechanization, too much capital. So you're buying more buildings and more machinery and equipment, but you shouldn't. 3, you begin projects based on low interest rates and too much capital, not because they make you money. In finance, the way you do a project is you do what's called a net present value. What's a net present value? It's taking cash flows that are coming out. So if I do this, if I expand, I assume I'm going to make $1 million a year for the next 5 years. If I bring it back to net present value, which is present, which is today, I'll make $7 million minus what it costs me to make whatever, if it's a building or if I'm buying a shop, whatever my cost of putting it in. So it's the future values, making them back to present, and then minus the cost to open a store or whatever it is I'm doing, the cost to buy my inventory per se, so I can make all that money. That's net present value. If it's positive, you do the project. But do you really need the project? Well, if it's negative, then, and you're still doing the project, that's a malinvestment. Why are you doing it? You shouldn't be doing it. It's not a positive net present value. In other words, we're doing the project, we're going to lose money on it. So what are we doing? But that's a malinvestment, is doing things you shouldn't be doing. Key to the trade cycle, bust at the malinvestment stage. No demand and too much supply. That's what happens in this stage. This is what I'm saying. This is the trouble. Money's cheap. You have it, you buy it. Now what happens? You do investments you shouldn't, but this is electric car, okay? They got too much money. They make the electric cars, but too much supply and no demand. This is a perfect example of one. The bank must fold. Companies can't pay back the IOUs or loans or bonds. Nobody thinks the boom will end. That's the problem. What the fuck's going on now? You've had interest rates at 0% for all of Obama's term. Trump tried to raise them, realized he was going to collapse the system, lowered them back, and now they're raising it and they are collapsing the system. But they're doing it because they want to do these CBDCs. That's the reason Powell's raising interest rates. He wants to collapse the system, and this is the way to do it. There's too much debt. That's why Biden printed $10 trillion. That's massive inflation. So when they tell you they're raising interest rates for inflation, they're full of shit. They're not doing it for that because it's got nothing to do with killing inflation. The recession, well, you printed too much money, right? So if you printed too much money, raising interest rates, what does that have to do with you printed too much money? You still printed too much money. So you got to get money back. So if people put it back in the bank and they can destroy it, would maybe reduce it. That's probably what happened with the 20%. But by raising it 0.5% when inflation's 17, 18%, and you're at 5%, what are you doing? You're not doing anything. People that are jumping into bonds to get the higher rate, they're all going to lose. All the people with the cash in the bank are all going to lose unless it's a few thousand. So they're really fucking over everybody really good. Number 7, the boom continues based on low interest rates and lots of capital. So where it's really starting to fade in the malinvestment stage, it's booming. You still have this boom going on because you know what? The interest rates are low. I'll take out a loan. You got to pay it back. Well, I won't worry about paying it back. I'm just going to take it because I'm paying 1% of my money. I bought a car in 2018 because interest rates were 2%, and I paid it off already because I know that the interest rates are going back up. So I got out of it before I paid it off in 2.5 years. The $24,000 Camry, because I knew I should buy it at low interest rates and I need to get out of it before the rates jump. Now, I was smart enough to do a fixed rate, and that way my rate would always stay at 2%. When I had a house, when I was married, we did a fixed rate of like 3%. And where everybody got fucked in 2008 is they did variable rates at 1%, not understanding rates are going to go up. There's a rate from the Fed, but that's not the rate the mortgage companies charge you or the car companies charge you. That's based on inflation. So if I get you into a 1-year variable or a 30-year variable, the first year is 1%. You can guarantee it. The second year is 2.5%, 3%. The third year is 4 or 5%, and they move up and up and up. So if you can't afford that, and if you're getting such a low interest rate, what the fuck are you doing not fixing it? Fix it. And if you can't afford 2%, then you can't buy the house, which is the housing crisis, right? People who couldn't afford it were buying it. Okay. So the boom continues based on that. Step 8, consumers get increased income. Consumer goods boomed. The consumer goods go up, and the consumer income goes up. That bonds based on assumption of increased income. Consumer goes into debt or bonds. Savings drop, debt goes up. Everyone wants consumer goods and the debt increases. So what's going on? Everybody's about to fuck themselves because the consumers get money, they borrow for it, credit cards, buy a house, buy a car, because they think it's not going to end because nobody understands this shit except for us. And what goes up must come down. If you raise interest, if you lower interest rates, you eventually must raise them, which is what they're doing now, but not for the reason they're telling you. It's oh yeah, we went to the moon and 9/11 was a terrorist attack. Planes flew in the building. Oh yeah, but we didn't have F-18s sitting there. We let the second one go too. It's part of the plan. What the fuck was that? So this is what's happening, right? So they've lowered it. So you're going to go out and buy more golf clubs and go on vacations and buy another car and buy more clothes and buy stuff that you might not need, but you're going to buy it because it's cheap and you have the money. So your income's going up, your goods are going up, but then you go into debt. So your savings drop because you're pulling savings out to go buy the car, go buy the golf clubs, go on the vacation, get a new wardrobe, get a leather coat, whatever it is you're buying. Maybe you redo your kitchen, you do a deck. So there's a lot of shit you do, but you're borrowing from, you don't have the money or you're pulling it out of your savings. If you don't have the money and you take a loan, you got to pay it back. And when interest rates go up, then that's when you're fucked. And that's what's happening now. But if I stick to number 8, so my savings is down because I'm pulling money out of the bank to buy stuff, and my debt's going up because I'm going on vacation. I'm buying golf clubs. I'm probably buying a house because it's cheap. But the key is, can you afford it? Number 9, economy is less liquid. Consumers are into debt. Banks have the mail investments. Savings has dropped. So what did we do? We went to the bank or the credit cards and we put money on the credit cards. Now we got to pay it back. The banks are the credit cards, right? So consumers are into debt because they bought, because they thought, well, this will never end. And the banks are the ones that loan the money out that are like freaking out now because they can't get their money back. So I've loaned it to you on good faith that you'd pay it back, but you're not paying it back. So that's all what's the cycle, right? It's cheap money, and you do all this based on the cheap money, assuming it won't end. Then number 10, there's basically 16 steps. This was my test. This is my thesis, how all this affected the stock market. And I got an A on my thesis, which I have if anybody wants it. It's a lot of pages, but I don't know where it is. I thought I had it on disk somewhere, but anyway. Number 10 is the cash crunch. Banks start restraining credit due to falling savings and begin to question, can the borrowers pay us back? So the banks start freaking out. So I'm kind of combining steps because I know what's happening. So the bank says, you know what? I don't believe we've been to the moon. Okay. Phil, my default is to think the opposite of what we're told. No, what you need to do is not listen to anything you're told, except for by me, and listen and learn, which is not what I'm doing. And then you know what's going to happen. And then you don't have to listen to anybody. You know this is what's happening. Oh, interest rates are here. This is what's happening. That's what you want to get to, Phil. So banks are scared. They're going to lose their ass. So they start not letting credit, and the savings are falling, and they begin to question, can the borrowers pay us back? You got a lot of debt. So far, the job market should still be good because they haven't realized it. So I'm still working. Yeah, I can pay it back pretty much. Number 11, which is going to sound real familiar, the inversion in the yield curve, which is exactly what we have now. What does that mean? Short-term rates are higher than long-term rates. How the fuck can that happen? Don't I want to get more money the longer I lend it to? So if I lend you 10 grand for 10 years, I'm going to charge you more because I'm worried about inflation than if I gave it to you for 2 years. There's less risk because of less chance of inflation. So pretty much if I lend it to you for 2 years, I might charge you, 2-3%. But if I'm charging it for 10 years, I want 10%. How does it get inverted? So how do I get more short-term than long-term? This is the crest for the boom. We're fucked at this point. Red flags. Long-term rates stay even. So the demand for short-term rates is increased. Nobody wants the long-term. They all want the short-term because they're afraid of inflation. So they're afraid, I don't want to loan money out 10 years. I'll loan it out too. And so because of demand for two, the interest rates go up. Step number 12, the cluster of errors. Banks want their money. Get out of loans and debt. Panic selling. They abandon projects. So you're running a company. You've got a loan out with them because you're doing this malinvestment capital bullshit. And the bank says, not sorry, I need my money back. And you're fucked because you made something that's not going to generate you any income. It's a malinvestment, or you got a third car. I don't really need it. I'll go sell it. So you got panic selling. You got projects that aren't going to be profitable that you're going to get out of. Maybe you're doing a deck. I don't really need the deck. Put in a new kitchen. Well, I don't. No, the old kitchen's fine. I don't need it. So you're trying to get out of loans and you're trying to get out of debt because the banks are asking for their money. And this is what I told my boss when I left my job. I said, you'll be out of business in 6 months because the banks who have loaned you this money and you have this line of credit running your business, you're not going to get it. How are you going to keep in business? He went right over his head, but I understand this shit. So, when I left, I laughed going, well, you're fucked, but you don't know you're fucked. I know you're fucked. So that's what happens. So you got a business running with a line of credit. That's where you're fucked. So the bank's going to say no more line of credit. How do you need money to bring an inventory to sell to make your profit? That's what a business is. Number 13 is the liquidation phase. Sell, cost cutting, companies close, layoffs. We are this far from that stage. The companies they're trying to increase their costs because of the inflation, but who's going to pay $5 for Oreos? You're not. Then you're going to have the companies close and the layoffs, and you already see that with Zuckerberg closed Microsoft and Tesla with all the layoffs. That's what they're doing. They're at the liquidation phase where they realize what's going on and they need to get out because that's what they've got to cut costs. That's really what they're doing, cost cutting. Part of cost cutting is laying off your employees. Part of it's getting rid of debt. As interest rates go up, and this is what Powell's doing, he's fucking all these countries over. So they're in debt to the U.S. and they need the dollars. And as Powell raises rates, now the cost of the debt, because they all have U.S. dollars, just went from 1% to 4 or 5%. Well, they on trillions of dollars, nobody can afford that. And these are governments. They can't print more money. This is why they're all leaving to go to the BRICS, because they don't like that the U.S. is fucking them over by charging them more interest rates. Wait a minute, you were charging me 1%. Now you're charging me 5%. I can't afford that. They never should have taken it, but everything was forced. You had to get U.S. dollars, all these countries, so you can buy oil and you can exchange Swiss francs for UK, for British pounds. You needed to take it into dollars to buy the other currency. It's all fucked up. Who would agree to that? These guys are so stupid. I'm gonna buy whatever I want in my currency. I'm not gonna change currencies to buy the new currency. How much is that costing me, right? Because there's a price, a cost for every time you exchange your money. I was a little bit disappointed in Lisbon when I'm buying. Okay, the cabs don't take credit cards, very few. So when we go to dinner, we take the cab. I need euros, so I go with my ATM. Now the euro is like 99 cents to $1 US. That's what I should get. I had to pay it 113 for a freaking euro. That's 101. What the hell was going on there? So I could get the money to pay the cab driver because he doesn't take credit cards or debit cards. So fast forward it. What the hell is the cab driver going to do when there's no money in Lisbon and he needs to take central bank digital currency? What's he going to do? How are you going to pay the guy? I don't take credit cards. Well, all I got central bank digital currency. This is the point that they're not grasping. You still always need money for some things. That's just the problem with it. There's too many times you need money. Now, yes, we can use the debit card here for a lot of stuff, but there's times you want to tip and just give the guy a $10 bill, or maybe the taxi or Uber's okay. But there's a lot of times, like I saw, I was at the restaurant yesterday and somebody left $4 as a tip on the table. What if you're poor? You don't have, you want money. That's the problem. That's the problem. That's why you got to have money. You always have to have some form of money. It can't all be digital. Now, yes, we use the debit and credit card a lot, but you can't always do it. Okay. So back from Lisbon. Now we have, so that was the liquidation phase, phase 13. We have phase 14. We have two more phases. Deflation. Banks have bad loans. Fiduciary money drops. Banks can't find willing and able to borrow. So the banks have realized these bad loans on their books. Shit, I lost $5 million because these people aren't going to pay me. That's the margin movie. People can't pay the mortgages. So what happens on the margin call show, Jeremy Irons, all of a sudden the light goes on? Like, what the fuck? You didn't realize that? Had he been an Austrian economist, he would have realized that 5 years before it happened. So he's stuck holding all these and people can't pay. And they have bad loans, so they're not getting the payments of the mortgages. That's that. That's not what's happening now. It is happening in certain areas. People are defaulting, and you're getting a lot of what do you call it? Shit. Anyway, people are defaulting on their mortgages. They're defaulting on their car loans. Shit. I can see the word, but I can't think of it. Anyway, so that is what's happening now, but that's the driver of this is the inflation and the high interest rates crashing everybody. That's what's happening now. So the banks are fucked with their bad loans. And the other thing is they can't find, so the next step 15, they can't find borrowers. So the bank works by taking your money, giving you 2% on your savings. You bring in 20,000. Here's 2%. I take your money and I loan it out for 4%. I make 2%. That's what a bank is, right? And I create the money out of thin air. That's why I'm still leery that the banks are going to be out of this. So the banks are now in step 15 looking for borrowers. Well, wait, I need money in. I need to loan the money out. I've got the deposits. I'm giving you 2%, but I don't have anybody that I can charge 4% for, and I can make my 2 or 3%. That's the fault. That's the problem of what's happening, is that the banks are collapsing because they still got to give out the savings, even though they were zero for most of the time. Now they're finally up, I don't know, 2, 3. I don't care. I don't want any money in the bank. See, this is the problem now. You don't want money in the bank because your fear is the banks are going to not give you the money. And your other fear is the inflation. If I keep my money in fiat currency, it's losing its value and it's eventually going to zero. So I don't want 10 grand in the bank earning 2% because I'm worried about my 10 grand. That's why we run and buy gold and silver and mantle cards and diamonds and anything that has an asset that it doesn't matter the currency, people will buy, and it's got a demand for. We know the gold and silver. to say there's huge demand is an understatement. There's so much demand for gold and silver now. And the price, I was watching one guy and he's saying normally the price dictates the derivative. In gold and silver, the derivative is dictating the price, which is ridiculous, which is what's getting broken now. There's too much demand for the physical and they're fucked. These ETFs, please get the fuck out of them. They're not real gold. You're going to get screwed. Get out, buy the real gold, silver. And I got to say quickly, because is it going to be there at the price it's at now? No. You got till January 1st, let's say, to go to the store and he can get silver. He probably doesn't have gold. Does he not? He can't get any more because they don't want to sell it. They want to hold it because they know it's, and I don't know if that's the Federal Reserve or whoever prints it saying, fuck it, we don't want to print it. We want to keep it. Probably. So we get to step 15. The banks can't find borrowers. They're stuck with the money. They're losing their ass. Now comes step 16, the cleansing out process, which has not happened for a long, long time. Everybody tries to get liquid, businesses lay off. And the last time this happened was 2008. This should have happened 3 or 4 years ago. And this is the problem. So now we get back to just trying to get back to even, I paid off all my debt. I've laid off my workers. Now let's run my business again. And then, so people are unemployed and, so now, okay, we'll start hiring again. We'll go back to capitalism. Oh, you want a green? I'm going to make the green shirt for you. And then hopefully there's enough buyers. And then it slowly, as it grows, now I hire back. And that's the beauty of Austrian economics. Capitalism. You must have capitalism. You must have competition. That's what it is. But you need, as I pointed out several times, and I will point it out again because this is the most critical thing, which is where is it? I think it's in my book. So again, that's the quantity of meat. I want the other part. Real quickly, the worst investment for a bank is real estate. So you must understand that. Where's the... Anyway, there's one on the... where is it? I apologize. I went back to what money is, but I wanted to go back to the 4 things of a country. So what happens when you take this many notes? Okay. So then we get back to what is a financial power, which is this is what the basis of Austrian economics. This is what we all want. We all want freedom. We all want competition. So to become a financial power or a country that is successful and the people are happy and prosperous, you must have low taxes. You must have free trade, most important. You must have law. You must have stable money, and you must have good communication. That is the backbone of how you need it. But what's happening is, since there's 2 types of economics, the Keynesians, which are communist, and the Austrians, which is us, which is free market. That's what you need to become a financial power, is the free market. Low taxes, free trade. You got to have free trade. In other words, if me and Bobby want to make a trade and I'm going to give him an ounce of gold, he's going to give me 5 ounces of silver. But there's no charge to it. It's got to be free. It's got to be, we both gain from it. That's what it is. You must have a rule of law, which includes not having monopoly. So rule of law says if this is to protect the business, right? So nobody can steal from you or corrupt you or anything else. There must be stable money, which means not the bullshit that's going on here. You got to have stable. That's why you need gold and silver as your money, and you must have good communication so you know what's going on. Now, the key to this whole thing, the trade cycle will not happen if it's created by an increase in savings. We're all prospering. Only by an increase in the money supply will it happen. So if there's just savings and we're all smart and we all make more than we sell, or our income's more than our expense, and we increase our savings, then you'll never have a trade cycle. And if you have the gold system, gold standard, only by an increase in the money supply will you get this bullshit, which is what we're in now. This is the problem. Now, the Keynesians don't understand this, and they sit there and they go, well, what the fuck? We'll just print and print and print. Well, what's that? Increase in the money supply. You're doing the trade cycle. It's poison. You got to be kidding all those people, because nobody understands it. They don't get the mail investments. They don't get the banks are getting fucked. They don't get the layoffs. I get it. They don't. That's the problem. So they keep printing money, which they think that there's no consequences. Oh, we'll just keep printing to pay for stuff. Yeah, we have a debt. Who cares? We'll never pay it back. Are they insane? I think they're all fucking insane. So that is your trade cycle. There'll be a test on this. That was my final exam, and I got an A in the class, of course. So we'll talk about money one last time because it's a wonderful subject. So this is why I'm in doubt that we're not going to have this stuff. Okay. I don't know how you can not have this stuff. Why? Because it's got to be a medium of exchange. Is what everybody wants. Does everybody want central bank digital currency? Do we? No. Oh, it's just like the credit card. We'll just all have our money in the credit card. Is that what we want? No. That's the first problem. You have to have a medium exchange, and it's like, does everybody want an electric car? No, that's a male investment. That's bad for the economy because you're putting all the cost into it. First of all, there's not enough silver for all the batteries. Second, there's not enough lithium for all the batteries. How the fuck are you going to make these batteries? That's why they don't worry about it. You don't think they give a damn, Phil. It's not even that. It's just out there because these guys are idiots. It's not that they don't give a shit. They're just incredibly stupid. So you've got this. You've got items that nobody wants. What the fuck? Why do you want that? So. And then, do I even have the capability of building it? Do I have all the electric power plants to, you need your battery's running low. You need to charge it. Well, now we have gas stations everywhere. It's a mature market. I can drive a mile in any distance, any direction, and find a gas station. And I can drive to Vegas from here, and there'll be plenty of gas stations I can fill up with. If I have an electric car, I can't do that. Or what if I'm not on the highway? What if I go to see, a friend or a shop? Oh, I'm low. Where do I fill up? How much is it going to cost you to fill up with the electric to recharge your battery? You think that's going to be cheap? There's no way it's going to be cheap because they got you by the balls then. So again, still, what do you think Saudi Arabia and Russia are going to do? They sell all the oil in Venezuela. What are they going to do? So they're not going to just sit by and watch nobody buy oil anymore. So really, what is going on here that all of a sudden we don't want to use oil? Are they not? Is Saudi Arabia running out of oil in Russia where they don't have anymore? I was watching something on, it was Greenland or Iceland, the one with all the ice. Underneath it is all a ton of oil and raw materials and gold and diamonds and stuff like that. It's all under the ice, and probably in Antarctica too. Something about the snow and the cold must create that because Russia has got a huge amount of it. And most of the desert is where you find oil. Most of the ice is where you find diamonds, gold, and the natural gas stuff. So we want a medium of exchange is what everybody wants. They used to do tulips. They used to do sheep. They used to do a lot of stuff. In the Roman time, they used coins, and then they ended up debasing their currency, taking all the gold out. And who would have thought Rome would have went, right? And we're right there. We are Rome right now. Originally, cows were the medium of exchange. So there's two values, the exchange and the use. Convenience develops by economics, okay? So the qualities of the medium of exchange. One, it's portable. Is the digital currency portable? So it's in your wallet. It's on a credit card. I assume. Are there going to be money? I don't know. Are you going to have digital currency for 337 million people in the U.S., or maybe it's 350 million with all the people you're letting in from the south border, the west border? You got a system big enough for 350 million people using the little card? Now, the fact that they want to know where we are, it's too massive. It's sort of like if they want to, they can probably do a sort and a filter on you, but there's too much to look at. So they're not tracking every month. They can't. They got tax returns. They can see what we're doing, but do they do anything? No. They only go after certain people or things. So the quantity of the medium has got to be portable, which we don't think it is. This I can throw in my wallet and it's portable. Is it scarce? I don't know. Can you have a digital currency, a central bank digital currency? Is that scarce? We don't even know what the fuck it is. How can it be scarce? It's got to be for 350 million people. That's just in the US. There's supposedly going to be one for each country. So is it the same currency? Is it even currency? Well, what the fuck is it? And it's for the whole world. That's not scarce. How is the value going to be determined? So if I go to Lisbon, how do I use my central bank digital currency for the US, or do I need one for Europe? Is it going to be the same value? How the fuck can it be the same value? Remember, overabundance loses value. I see this coming and going real quick. Is it divisible for small exchanges? Well, if it's like a debit card, it can be anything you want. Check that box. Fungible, everything is the same, replaceable. This, you got another dollar or that. See, here's where I'm arguing is I can go to the bank and go get more of these. What I got to do now, if I get PayPal, I send it to the bank. Then I use that to pay rent and food with the credit card, with the debit card. But if I want money, I can get money. So that's the question: is what is it the same and is it replaceable? That's not clear to me. Acceptance. Does everybody want it? No, it's not accepted. Everybody wants dollars. Everybody wants gold and silver. Well, most of the smart people want gold and silver. A lot of people don't. They don't understand it, but it's money. And I think if you offered, I bet if I offered anybody, there's a gal who is into this stuff. She's like she works at the swimming pool. That's where I met her. She's like the manager. We start talking about all this shit. And I told her about my throat. She gave me that. So if I gave her a silver ounce because she had a baby. So I said, here's a present for the baby. She took it in 2 seconds. There was no question. If I offered anybody silver or gold, they would take it, right? I don't know anybody would say, oh, I don't want it. I remember there was a test that I heard where there was a candy bar and a little thing of gold. And they asked like a 5-year-old, what do you want? Oh, of course, she took the candy bar. I don't think if you offered that to an adult, he would turn the gold down for the candy bar. Anyway, so is it acceptance? I don't think so. Is it durable? It's a debit card. I guess they're durable, right? Or credit card or whatever they're fucking going to be. I don't know. See, the beauty of the credit card is, well, I don't have money. I'll go on a trip and I'll pay it back later. It's a loan. Are we going to have loans with, how are you going to buy a house? Are we going to go, is there a bank, or are we going to the central bank and saying, yeah, I want to buy this house, so I need a loan? I mean, how is that all going to work? It's so confusing. That's why you need banks for the individuals. The central bank is not set up to go and get, I need money I want to buy a house, I need a loan. I want to buy a car, I need a loan. So what's going to happen to those businesses and industries if nobody can afford a house? Nobody's got that much money sitting around where they're just going to buy a house. So what happens? How are we going to live? Are we going to have houses? And how do we pay for them? How are we going to get a loan? Is there going to be loan companies? Value equals most marketable commodity. So that's what we're faced with. That's why you need a medium of exchange. That's what it is, right? This is a medium of exchange. This is go to Kroger's and go buy some fish and meat and some veggies so you can eat, right? So I can use a debit card or I can have the money. But what the fuck is, what the fuck's digital currency? I don't get it. There's too many questions. Carl Manger, an economist, says value equals depends on judgment. So how are we going to value the digital currency? And this is a nightmare. Money, the functions of money is it's a medium of exchange, work for money to buy food, store of purchasing power, you spend it over time, an IRA, unit of an account, measurement of account, common denominator, you made or lost money. How are we going to get any of this with the central bank digital currency? So we need this explained to us because I don't get it. I need a bank account where I can go and get money. Do I need cash dollars? I don't have any in my wallet now, but I know it's at the bank, and I know I just transferred 30 grand from my IRA. I know I'm going to take that and put it in my safe. I don't want it in the bank. I know I'm doing that tomorrow or Friday whenever the money comes in. That's for sure. Now, I might be only able to get 15 grand Friday and 15 grand Monday, but I'm not leaving it in the bank. That's where I want the cash. So this is going to be very interesting. Anyway, that's what we're looking at with the central bank digital currency. That's what the trade cycle is. That's the inflation. What else? What else are we going to teach today? So we've looked at the trade cycle and how fucked that is. Let's talk about Keynes. So Keynes is the evil communist that everybody keeps talking about, and for some reason is controlling the U.S. Keynes wants a mature economy. No more can be invented. Demand side economics. Overall structure of the economy is a black box. That's it. You can't have nobody can come up with the internet. Nobody can come up with anything new. Homogeneous Keynesians, labor and capital are all the same, which means there's no division of labor, which we need. We need an IT person, and we need an accountant, and we need a handicapper, and we need a doctor. We need a cook. The Austrians are heterogeneous, which all capital is different. That's what we're saying. Where the Keynesians, that's where the communists are coming in with this. We're going to make everything the same, right? We're only going to make green shirts. We don't want blue and yellow. We don't want you to have choice. We're going to tell you what you want. It's all control. It's basically, look at communists, right? Look at China, look at Russia. The history of economic thought was land, labor, capital, and information. That's what productivity is. So what we're trying to increase is information. That's your knowledge. That increases your economic thought, your thought. That increases your worth. So when I watch these movies, like whatchamacallit, Margin Call, and all these people are getting laid off, and this one kid keeps crying. I hate that kid. Wait a minute. What's your skill set? Like, everybody's so worried they're losing their job. Like, wait a minute. Your skill set determines if somebody else wants you. I got a master's in this, so I'm not that worried about getting a new job, provided we don't have this massive depression where we're on step 12 and everybody's laying off. So then it's a timing issue. But you develop your skill set. The more your skill, the more you get paid. So IT people get paid a lot, as do doctors. Lawyers, there's too many of them, so that's what hurts them, is too much competition, which lowers their price. So that's what you do. Why do you think quarterbacks make $30 million a year? Or as Bobby knows, in baseball, if you can play, you're going to make X. And if you're just Justin Verlander, you're going to make millions. If you're Joe Verlander, you don't make anything because you're not very good. Your skill isn't good. So the better your skill set, the more money you make, because less people can do what you do. That's the whole point of it. So you develop skill set. So if you lose your job, there's another job where people want your skill and you go to that. That's what I teach young kids. Build your skill set. And then if you lose your job, you just, okay, I'll get another job because I have the skill set that's in demand by companies. Mine's corporate finance. They don't use my economics background that much. That's why I'm teaching it. But the corporate finance, every company needs it. Every company needs finance. They need to know the cost of their goods. They need to know, are they making money? They need to pay taxes, so they need to see everything. They need to keep track of budgets and forecasts. That's all I do. It's a highly developed skill that even with computers, you still need my skill. There's Excel, but somebody has to drive Excel. And then there's SAP or Oracle, but you still got to pull the data and analyze it. You can't get to that without human beings. So that's why you develop your skill. The more skill, the more you make. So let's see. So basically Keynes and the MMTs, they want government to control it. They don't want you to save. That's why the interest rates have been very zero, because you don't want to save. There's no reason to save. They're not paying you. So that's what Keynes did. He wants to limit the output. If output goes up, prices go up. Savings is a leakage. Investment comes from spending. So what Keynes is saying is, I don't want you to save, hence the zero interest rate. Hence, you make your money and you buy something, and then the prices will go up. That's how the economy goes up. So investment comes from spending, not saving. That's why you see the government spending so much, because they don't get it. This doesn't work. By the way, Keynes is wrong, right? It doesn't work. It's not really what you want. So therefore, they're doing things that are stupid, right? That it's been proven not. So let's see. So the Keynes says if savings go up, consumption drops, investment drops, output drops, income drops, and savings drops. All this bad things happens if savings go up, right? Because that's money taken out because they don't see there's more money. The Austrian is consumption drops, savings go up, interest rates drop, profits go up, investment go up, output goes up, and income goes up. So it's okay to save. It's not going to kill your economy. Businesses try to make a profit. If savings go up, interest rates drop, and the other way interest will go down if productivity goes up. So you're always striving for productivity. That's the beauty of computers. I got comment, but I don't know I don't know how it applies, so I'm not going to read it. So basically, that's what's going on. Anything anybody wants me to cover, this is just the surface, but because I watched the video on the whole reset, that's why I focused a little bit more on the reset today, but I can do another one tomorrow. I have another video to show, but I think I'll show that on our next class. It's an 8-minute video, and I've already given you some videos, so I don't want to give you more. Anyway, so now you know what's going to happen. You know the expected outcome, which is what I kind of brainstormed the answer to that last week in football, right? We're trying to figure out expected outcomes of the games. And then each week the games change, the opponents change. Michigan, Ohio State. Now Michigan plays Purdue. What's the expected outcome? Well, I think Michigan's going to kill Purdue is the expected outcome because they're a much better team with a much better defense. I struggle with Michigan's quarterback, and then their running back is now in a cast. So just to show you, don't count on him. Their best running back, whose name escapes me right now, but he's gone. He's in a cast. Maybe he'll be available for the playoff, but he's not available for Purdue. Anyway, so that's what this is. So what I read you was the trade cycle, which is expected outcome, because you're lowering the rate causes all these easy things, which come back to bite you in the end, forcing rates back up, and then you clean the deck and you start over. That's where we're at now. We have the inverted yield curve. The banks are having trouble getting their money back. The banks, for some reason, like BlackRock, are into real estate, which is the worst thing to be in. Excuse me. So you don't be in real estate if you're a bank. You want short-term stuff. And how in the world? So now what's happening at the Federal Reserve? This is one part the guy talked about, which will be on the other video. He says the problem is they have a lot of stuff loaned out at 0%, but now the interest rates are up. So their loan out is at 1%, but all the savings is at 4%. So they're losing 3% on everything. The more Powell raises the interest rate, the more they're losing because they're in all these investments that they got in at 0 and 1%. So they're getting in at 0 and they're paying out at 4. They're fucked. This is the central bank of the U.S. How could a central bank be this stupid? Well, it's the U.S. All the government people are stupid here. See, the problem is we go and say, oh, they must know this, and this is the problem, and this is what's causing the problem. And they might not know it. They might. I had to take a master's class. You guys don't know it. Now you do know it, but just keep in mind there's always expected outcomes and there's always action reaction. So whatever happens, there's always going to be reaction to it. That's why you got to think. You got to think about what you do and then what the reaction, so your action is going to cause a reaction. What's the expected outcome of your action? And that's really what you're looking for. So if you leave your money in the bank and you leave $100,000 in there and you don't take it out, the expected outcome is you're going to lose it all. Well, you'll lose most of it. You'll be able to transfer some of it to the new currency, but most of it you're going to lose, especially if you have like $1 million. You're totally fucked. Now, Do you put it in the stock, but you know the stocks are going to crash because of what I just read you, right? You've got all this mail investments. You got people aren't going to be able to, don't have extra money because of inflation. So during inflation, what's happening? The value of the dollars drop. So more dollars to it takes more dollars to buy the same thing. Well, your heating and your lights, your utilities have gone up. So wait a minute, I can't print money. So if I have $100 and I normally pay out 50, wait, my heat and my electricity just went up. Now I got to pay out 60. My 100's still 100, right? I get 100 in income. Now I'm up from 50 to 60. Well, wait a minute. I just lost $10. So I can't, I got to not buy something. Well, wait a minute. Food just got up. So now your 60's up to 75. Well, how do you replace that? You got to eat, you got to heat, you got to have the electricity. So now you got $25 left and you're not buying a car with it. You're stuck where you can't do it. So because of that, most of the stores are going to have bad earnings. And so you're going to hide your $1 million in stock, but wait a minute. They're all put it in a bank. Well, I just showed you the banks are getting fucked. You don't want your money in the banks. You don't want your money in the currencies. You can't buy bonds, which is what everybody's doing. So everybody's realizing this, going, well, I'll buy bonds. Now, I assume most people are aware of the central bank digital currency, but nobody knows how it's going to be put into play. We know this guy from Switzerland told us, well, they'll probably move it from this currency to the other, but limited you. So if it's 10 grand, you can probably switch 10. They want something to go to transfer, but they don't want too much. We know our debts are going to be gone. The mortgage will be zero. The credit card will be zero. Anything else that you have will be zero, but then your money will be zero. Well, you'll have a little of it. So if you got 50,000, your kids, then you'll probably be okay. I would take it out of the bank, and then when it happens, I'd maybe then say, okay, here's 10 grand to go into the central bank digital currency if I can't use money anymore. Now, there'll probably be a lag time of you can use money for another year or something. This we don't know. This we'll have to see. That's what makes sense. What are people going to do? You got money in your safe or whatever. What are you going to do with it? Or you're a business. You got money. You deal in money all the time. I'm at the restaurant yesterday. The guy's getting paid in money. He's got a cashier's full of money. The grocery stores. So they all have some form of money. The taxis. So they've got to have this period of pulling the money in. So as I don't have as much money, I can't spend as much. The businesses lose sales, they lay off, and then what happens is the stock market crashes because it's based on future earnings, which companies won't have. So that's what inflation is going to crash the stock market. And where your debt would go up, it won't, because they'll switch currencies and then your debt gets gone. So you have to understand that, which nobody understands. So when you pay your credit cards, just pay the minimum, provided this happens in the next 6 months to a year, then you're fine. Then your credit card goes to zero, your mortgage goes to zero. I would say keep paying it. You don't want to fuck your credit up and have issues where you're not paying your credit card and your mortgage at all. I just think you pay smaller amounts of it and go from there. That would be my suggestion. Keeping in mind, so you owe 10 grand on a credit card, there's no reason to pay the 10 grand because it's going to go to zero. So why worry about it if the central bank digital currency comes in? Or they have to come up with another medium of exchange currency to offset this one, because this one's broke, right? It's too much. There's too much inflation. You really aren't going to stop the inflation. Nobody wants this because you're fucking off Saudi Arabia, Russia, China, and the whole world. So Saudi Arabia just announced They'll take any current. They don't want the U.S. They'll take the Chinese yuan, the ruble, or other currencies for their oil, which is what made the U.S. the lead currency. So the U.S. is basically fucked. It's just a matter of time till nobody wants the U.S. dollar, which is what they want because they want to fuck us over with the central bank digital currency, like nobody wants the electric cars. So that's what's happening. So if you're rich, you're fucked. I mean, if you hide your money in the stock market, it's still, the market's going to drop. It's going to crash. So you can't keep it in the stock market because your $1 million isn't going to be worth $1 million. You can't put it in bonds. See, I did this when I wasn't drinking, but I'm getting hungry. So somehow it's feeding off of me eating is causing me to hack. And when I don't eat, I'm not hacking. Very see how I analyze. So your biggest thing is I'd go buy a shitload of gold and silver because that you'll be safe in, and they're not going to take it. They're going to come out with the central bank stuff. You'll be able to take it back to your gold store, go on eBay. I assume there'll still be eBay, and sell it. I don't know. If you need to, you jump on the plane and go to Switzerland and sell it to the guy. People will want gold and silver because it's really the only safe thing, and it keeps you out of the central bank digital currency. However, you're still going to need it because when you sell it, you're going to, what are you going to get it in? You're going to get it in central bank digital currency. That's really the key to it. So I got to do something. This girl keeps bothering me. So what happens is they'll keep it in the, you'll eventually get back to central bank digital currency. With that happening, that's what you're going to sell your gold for. So I guess you'll get the credits in your account. I don't know how that's going to work because then the government's going to know you sold the gold. So maybe we have to go to Europe or Mexico or a different country to sell it. But how is it going to work if we're in a different country? How is the digital currency going to work? Here, what did I do? Anyway, I'm busy with class. Talk to you later. So when I'm in Lisbon, she didn't need to hear that. When I'm in Lisbon, what did I do? I got euros. So what did I do? I used my debit card. I went to the ATM. I got 100 euros. Cost me 113, and I had money for the cab driver. How's that going to work? This is the point that I don't know if they figured out is how is it going to work? How is it going to work with, is there going to be, are they actually thinking there's going to be one currency? However, we have the BRICS currency, which is backed by gold. So the BRICS nations aren't going to. So when I go to Russia or China or these other, India, there's a lot of Indians who live here. So they go home to visit their family. What are they going to do? What's Asia going to do? So this is really the question. Is it just an American? But then how do we use it in other countries? This is so confusing. So right now you have all the countries using their own currency. Now you're going to go to what, one currency for the whole world? You think that's going to work? Well, it can't because you have a gold-backed yuan in the BRICS countries. So you have 55 countries using that. So now is the digital currency only in the U.S.? What's the FX rate between the U.S. digital currency and the yuan backed by gold? What's that conversion rate going to be? So if I'm in Europe and and Europe doesn't want to use, I think they're going to have their own digital currency, and this will all come out. And these are just me asking, me trying to get the outcome, right? I'm trying to get our outcome, our expected outcome, right? So I'm asking questions that get us to the expected outcome that I don't understand, that we need explained to us. The timing will probably be a year. Gold will blow up soon, but the currency probably will take a year because there's too many questions, and they have to make the stores understand you need to now switch to take the digital currency. How are you going to do that? Right. So, oh, we'll just use our credit machine. Well, wait, that goes to Chase. It doesn't go to the central bank. So you're going to need a new thing for the card, and you're going to have to issue 350 million cards just in the US. And what's Canada going to do? And what's, these other countries, what are they doing? So this is a big mess right now to try to make a one world currency, which you can't do because of the BRICS countries and us. They do want digital, but is digital going to be the only thing, or is it going to be like our credit card now? I have a Chase credit card. I have a different debit card. I have money at a different bank. So what am I going to, how am I going to buy a house and a car? So there's so many interesting questions. Phil, those are all excellent points, Professor. I don't think anyone but insiders know all the answers. Phil, I don't think the insiders know the answers. They're, I guess, beta testing it now, but I don't know. Okay, if it was me doing it, I would never get away from this, and I would put us on the gold standard. If it was me, and you said, Professor, you're running the country now. You got Austrian economists. How would you do it? We'd be on the gold standard. That's what we would do. We would have to buy the gold from China and Russia, who seem to have it all, or go to a gold mine or something. But we would have to go back on the gold standard. It's the only freedom there is. I'm not out to control people. They apparently are, without any idea of how the fuck they can control people. So if I want to sell my gold and get 50,000, but that's 50,000 now, what's it going to be valued at in central bank digital currency? It ain't going to be 50,000. That's in US dollars. But now, very important point here. You do not want to sell your gold. If it hits 50,000 in January, you go, great, I'm rich. Give me 50,000. So you go back to the coin store and he gives you 50,000, or you go on eBay. But you don't want this, because if you get this, again, you're fucked. What do you do with this? You don't want to pay your credit cards or your mortgage with it. So now you're sitting on all this bullshit money that's worthless. It's okay for a short period of time, but if the bank says, okay, we're all done, you can't use that anymore, you got to use the digital currency, you're fucked. So you need to hold on to your gold till the currency switches. Either you go to Russia and you give them the gold and get $50,000 worth of rubles backed by gold, so you're fine, or you hold it until they switch. And then when the digital currency comes out, that's when you sell your assets. You don't sell your assets before. You don't want to sell your mantle cards, your diamonds, your anything, your car. You don't want to sell it now and get the fiat currency. You want to wait, because they're not going to exchange a large amount of fiat currency. So if I get 50,000 for that, what am I going to do with it? I can't put it in the bank. I'll lose it all. I maybe can leave $5,000 in the bank. So now I got 45,000 of dollars. What do I want with it for? I don't want, okay, a few for rent or whatever, but I really don't want it. What I want the gold for is to buy a house down the road when the guy who owns the $1 million house or the Ferrari or the nice Mercedes, and they're trying to sell it. I'm Eddie Murphy. Here's an ounce of gold. And the guy takes it so fast his head swims, because he knows it's how much it's worth. And who's going to be able to afford it? Nobody's going to have $1 million for this guy's $1 million house. Where are you going to get the $1 million from? You can't carry it over. LeBron James can't have $1 million in his bank, and now he's got $1 million in CBFC. They're not going to let him have it. He's only going to have maybe 50,000. So anybody who could afford the $1 million isn't going to have it. Is there going to be loans? Are you going to be able to get a loan to buy a house? This is, really what the fuck, right? Are they going to get a loan to buy the house, to buy the car? How are you going to do that? Because if I was anybody, I'd go buy a house right now and knowing it's going to be all wiped off very soon. So you almost want to do that. Of course, you need the down payment and the good credit, but basically, you probably want to go buy a car knowing you're not going to have to pay it off based on, or just drum up your credit, go buy gold with your credit card like I do. And then I won't have to pay it off. I'll just have to pay that out. So anyway, that's what's really, I don't know how they answer those questions, Phil. I mean, it's not economics. So what they're doing is making the electric car, but nobody wants it. It's a male investment. Nobody in the right mind is going to buy it. It doesn't save the environment or the climate. I mean, Christ, on one hand, they put high fructose corn syrup in all the food, trying to kill us all, give us all diabetes and high blood pressure. And on the other hand, but we're going to get off of oil and have climate control. Are you fucking kidding me? The same people that are trying to kill us all with high fructose corn syrup are now going to, but we're going to save the planet with electric cars that, by the way, cost 60 grand, that, by the way, the battery lasts a year and then it's 10 grand for a new battery. Nobody in their right mind wants that. Not for those reasons, because we don't even know that there's anything wrong with the climate. Oh, it's getting colder. Well, maybe that's just because we're on Earth, we're on a planet. So that's really, there's so much to this. I don't see how they can do it. Now, they fucked up the currency. So we know gold's going through the moon and silver. We know they're both money. The guy just told us that. So with all that being said, we know what's happening. Is central bank digital currency the same answer as the electric car? Again, medium of exchange must be accepted. Is it going to be accepted? I don't want it. You don't want it. Nobody wants to be controlled or tracked. Nobody wants to lose their money. They got a hard sell when they come out and say, yeah, we're going to a digital currency. And by the way, if you got 100,000, you'll do it later. You'll do it. How many people, especially rich people, are going to sit for that? I feel sorry for all the athletes because they don't really, they go to Ohio State to play football. I don't think they're all economists. So they're going to go make money, and they make a lot of money. But like Tom Brady, what's Tom Brady doing? You think he understands any of this shit? His financial planners got him in stocks and bonds. So he's going to lose all his money in bonds, his cash money. These guys don't know what the fuck. So I don't know that it's going to be able to do it. Again, my last guy I showed you said there won't be digital currency because the banks won't allow to get off of money. Hey, Brock, government retirement accounts just got approved under the current administration to invest based on ESG principles, not investors' best interest. It makes me afraid for retirement. The only way you're going to retire, Brock, is if you have gold and silver. If you have anything else, you're totally fucked. Environmental, so yeah, that sounds like a real finance terms there. You've got to get into gold and silver. You cannot own, as I've said, you certainly don't want to own bonds. You certainly can't be in cash. Now, again, this is what this guy who's a Swiss banker is telling us. So, good God. So you can't, you really got to understand that. So it's not wanted. So how do you push something that's not wanted? This will be very interesting. FTX had an excellent ESG score, and of how much of a joke that is. Well, didn't they go bankrupt? Didn't the guy lose billions of dollars? That's why I didn't get into crypto, because I don't know. Gold I have. I can hold it. All right. I trust that. I don't trust crypto, which I don't know, which is really made for the Russian mafia. So if you want to lay in bed with the Russian mafia, more power to you. But if you think crypto is your way out of this, it's in US dollars, right? That's the value. Gold has its own purchasing power value. You must understand that. No matter what the US dollar does, gold will keep its value. Bitcoin doesn't have a value, right? It's in US dollars. It's not in Bitcoin dollars. If it was in Bitcoin dollars, it would be far more, but then where are you getting it from? And that's not accepted by everybody, Bitcoin. Yeah, they went under. CEO still not in jail. Nothing ever happens to these people because he was in bed with the government, right? So that's what happens. It's a real nasty government now. They're trying to hurt people. They're not there to lead people. They're there to hurt people, and that's really not good. I got it. Here's my phone. So all we can do is really educate ourselves, because we can't trust government, as we've talked about many things that they've done, going to the moon, Kennedy, the 9/11, that we can't trust them. We have to be smart. If we can't trust them, why would we trust them now? So the question is, how do we block this? If we can block this, can they force this currency down our throat? Like, this is kind of like, this is what you have. There's a reason you have this. Can they, okay, everything's debit and credit card. Okay, I still have my bank. How in the world are we going to go to a central bank? Then they went under. CEO still not in jail, nothing. Okay. I thought we had a Newman. So that's really the problem, right? So I have to learn more about what do we do, and do we have to take this shit? I know with gold and silver, the problem is, can I buy? See, if I don't have this, let's say I want to sell my silver, because it won't be as much. It'll be 5,000 an ounce, right? So I'll get 5,000. How do I sell where does my silver go? So I'm going to go into the coin store, and he's going to put it on my central bank digital currency account. I mean, is that what's going to happen? And is that how I pay him? Is it like Back to the Future 2, where I put my thumbprint on it and that's how I pay for the taxi driver? I don't know. This is all very curious. I'm not sure. I've never seen anything like this. Now, I'm not into banking. I'm into economics, football, and all this stuff. So if money needs to be acceptable, it's not. Bobby, Brady just lost a lot of money from FTX collapse. Well, wait till he loses money in keeping his money in the bank. I mean, where does he put his money? He's going to lose his ass, because if it's in stocks, the value of the stock will drop. If he's in bonds, that's going to zero. If it's in the bank, he'll be able to keep maybe 40, 50,000 of it. But he's a multimillionaire. So the only answer to all those guys is gold and silver, but they're not smart enough to do it, because their financial planner, because they're football players, says you're in gold, you're in stock and bond, 60% stock, 40% bond. And you need to be at least 30 to 40% gold. Get out of the bonds and into the stocks while you watch the market crash because of the inflation. So you're fucked 12 ways from Sunday, and your only answer is gold and silver. You can keep a little bit of money in the bank to pay your bills. You pay minimum on your credit cards and your mortgage until they change, and then it'll be wiped out. but so will your money. So you need some place to hide your money. But keep in mind, you won't be able to use this. So you got 1 million of these. How do you spend it? You can't. Nobody will take them, especially all the BRICS countries and probably Europe. So what are you going to do with this? It's only good in the US, which nobody will take it because nobody wants it because you fucked it up so bad. That's really the problem. That's why you got to get into assets and out of fiat currency, as the guy was saying. That's fiat currency. It's just printed with no backing. So you need to get to the anchor, which is gold and silver. So you need a mix of buying enough gold and silver with having enough money so you don't have to turn your gold and silver in until it hits the 50,000 an ounce, or who knows what it'll be. And who knows if they do go to this digital currency, what it will amount to. But if they let it go to free market, it'll be huge, right? 50,000 won't be nothing. It'll be much more than that. So that's really what is the question of the balance. So maybe you leave 20 grand in cash and they'll allow you to switch it to digital currency. And then the rest you need in gold and silver, because if you keep 100,000 in your safe at home, it's going to turn to the dust because you won't be able. Maybe you'll be able to take it. See, this is the question: will there be a grace period? You have 1 year to get rid of your money and exchange it. Then you'll be okay. Then you can put it in your safe, take 20 grand, buy digital currency with it, and basically just switch it all to digital currency. But you'll probably have to do $10,000 and $20,000 increments. They won't let you do 100 grand at a time. Probably not. So that's what you need. So the gold and silver are going to be the instruments used to sell those assets to get the digital currency so you can eat and do everything you're doing now because you won't have that currency. I think what he said is they're going to give everybody like 5,000 or 10,000 to start with. It was like, okay, Bobby, here's 10 grand of digital currency. And by the way, your mortgage is now changed. So if you're paying, I don't know, 5,000 a month, right? Well, that's in US dollars. That's gone. So now they're going to have to come up with a new conversion rate. Is it 70%? Is it 50%? And that's one thing I asked the guy at the restaurant. What's going to be the conversion rate? You're $30 for slab of you got a slab of ribs for $30 for US dollars. Now the digital currency comes in. Now what are you going to charge? Because it's not $30 anymore because this is better money. Well, for the meantime, it's going to be worth more than the US dollars. So he's going to have to change his menu to say, well, now the slab of ribs is $15. And how much is the meat going to cost from the producer, from the cattle ranch? What are they going to now charge for steaks and burgers and ribs? See, there's this whole, domino effect that these idiots cannot be factoring in because, as I said, the guy at the restaurant had not heard of anything. So he doesn't even know how he's going to get it, how he's going to get paid, and how he's going to pay his vendor for the ribs. He has no idea. So it's not even started yet, right? So what's he going to just figure it out? Well, he's got to know what its cost is because it's a business. If it costs me $50, I need to charge and make 20%. So I need to charge $60. But if I don't know what the $50 is, how can I charge 60? So until that happens, we don't know what the fuck's going on. So gold and silver should go through the moon in January, maybe February. This new currency, I can't imagine it's got to be longer than a year away. Now, what will happen with the banks? Can the banks fold before the new currency, or do the banks fold during the new currency? And if the banks are folding soon because they're fucked with all these derivatives and gold and silver going through the roof, so they need to delay gold and silver because once that happens, all these banks are going to be big trouble. And all these loans that they can't get back are going to be in big trouble. So all the banks are in trouble. But the banks can't fold before the digital currency comes out. So if the banks fold, then the digital currency is not out yet. What do people do? So I assume if you've got your money, that's where I assume. So let's think about it. So I got 50,000 in my safe. I should be able to use that money, even though the banks aren't active, to go buy food and pay my bills with cash, right? Because the money still should be good. The banks might be in trouble, but the money's still good. So then that leads you from the money to the gold and silver going through the roof. But you need a bridge to get to the digital currency because it's not set up. I mean, nobody knows what to sell anything for because they don't know their cost. So the first thing you got to do is get the cost, but nobody's done that yet. So again, the guy at the restaurant doesn't know what to charge for his ribs. Not only that, he doesn't know what he's accepting. As far as he knows, he's accepting the same money and debit card that we're paying him with now. So that's got to be a long way away till he starts knowing his costs so he can then put his prices on the menu. And nobody knows what's the cost going to be. So the meat, the meat house, meat packing plant, whatever you want, the Green Bay Packers, what do they sell their meat for? They have no fucking idea. What's it cost them now to produce the meat, the ribs, and the steaks? They have no fucking idea. Nobody has a fucking idea what costs are now because you have to develop all them. That's got to take you time. It's not going to be, well, we'll do 1 for 1 or we'll do 70%. Well, you're just pulling numbers out of the air. You got to know what it is. So it's going to be very difficult to switch your cost and switch your price and your profit. How do you pay taxes? Are we going to pay taxes? Because that's in US dollars. But theoretically, we won't owe taxes this year because if they go to the digital currency before, it's zero, right? So that could be another big benefit, especially me. I'm pulling money out of my IRA, so I owe taxes on it. So how are you going to, and let's say I say, well, I'll go on a payment plan. Well, that's all wiped out. Oh, this could be beautiful. I'll just pay like $1,000 in my taxes and say I'll owe you the rest, and then they'll reset and I won't owe them a penny. God, I love that. So that's basically what all these problems are in this reset. Using Austrian economics, the first thing, it's got to be wanted. There has to be an acceptance of this digital currency, which there won't be. Who wants it, right? It's not going to make it easier. It's not like my debit. It would, in other words, just keep the banks the way they are, but they're all going broke because you keep bailing them out. So the problem is they can't bail them out anymore because they printed too much money and it's going to cause massive, massive debt. So part of the reason to switch the currency from the government's point of view is to get out of the debt. They'll just wipe out the debt. They'll just say, all this old money, it's zero. So they won't have a debt anymore. That's their point. That's their reason for wanting to do it. So they don't look like total idiots. They'll get out of the debt, the trillions and trillions of dollars. I think it's like 125 million in debt. 125 trillion. When you add in all these other little Social Security, Medicare, all this bullshit, plus what they printed, when you add it all up, because how do they pay Social Security now? They don't have money for it. You have less people working to pay more people because the system's all so stupid. It should have gone into Professor's account, Bobby's account, Nick's account, your 7.65, your employer match, and we'd walk away with 500 grand. But it didn't. It went in to pay somebody else. So now they're fucked. There's not enough money coming in. It's bankrupt. But where are they coming up with the money to pay out? And it's broke, and they're paying it out with they're printing the money to pay the Social Security, which is more debt. So they're really fucked with their debt. So that's their primary reason. But as the government, they haven't thought it through, realizing what does everybody charge. So they need time to somehow figure out if it's even money or what. So let's say it's even money. So the barbecue place now charges $29 of the new dollar, and his costs have stayed, and but I don't think that's the point. I don't know that you can just do that. Maybe you can, but maybe they try it. But this is supposed to be worth a lot more. As the guy said, costs will go down because the value of this digital currency will be much higher than the fiat currency. So we will see. But that's what we need to think about and figure out. So right now, the gold and silver saves your ass because there's nowhere to go, right? Stocks, bonds, unless you can buy the Chinese yuan backed by gold, which I thought about asking my friend in Russia to buy rubles and that are backed, if they have them backed by gold. That might be what I do, but otherwise you're screwed. You can't be in stocks, can't be in bonds, can't be in dollars. You got to be in assets. So what are you going to be into? And then you can't sell your assets until the new dollar. Otherwise you get fucked there because you won't be able to move, So don't sell a Picasso now, sell it later. To get $1 million, what are you going to do with it? So Professor, chicks are blowing up his car phone with text right now. Chicks are blowing up Brady's car phone with text right now. Why? Because they're laughing because he lost the money? Is that what they're doing? Or are they asking for dates because now he's divorced? I assume they're for dates, but I have a feeling he had 20 or 30 girls on the side anyway, just like she probably had 20 or 30 guys on the side. That's the problem with marriage is to only have one is ridiculous, especially when you're like a Brady or Bunchkin, the model. If you're attractive and rich, you're going to have a lot more than one person interested in you. So that's why I don't know why it's like, why did Tiger Woods get married? If he's a sex addict, why would he get married? Just bang all the girls on the side, enjoy yourself, and you can still have a good friend and you can have everything else. Just don't get married. You want kids? Go have kids with somebody. So I don't get like the whole marriage thing, but anyway, back to economics. So that's really what it is. Austrians believe in freedom. They believe in competition, the laws, the low taxes, the communication, and basically listening to what the people demand. So it's all about the individual. That's the difference between Austrian economics and Keynesian. We believe in the individual choice. You can do what you want. Don't break the law, but keep the laws very vague and very easy. Just no murder or don't rob me and don't kill me. Otherwise, do what you want. So we're all into the individual. We're into competition because it makes the quality better and the price drop. Because if I'm competing with another person, I gotta have my quality go up and my price beat his, or prove that you pay more, but my quality is better. That's why you hear the gold standard or Saks Fifth Avenue, whatever. What they're saying is, yeah, you pay more, but our quality is better. Or Mercedes, it's a luxury vehicle. Why would I pay $100,000 for a car when I can buy a Toyota for 30 or a GM for 30? Well, because it's a Mercedes, it's a much better car. So for the better cars, you pay more. Well, okay, maybe, but it's still just a car. And that's where they try to get you on status. But what you want is the free market. You want the invisible hand. You don't want government involved. I want this, the guy's selling it. Oh, wait, who else is selling it? This one's a little better. It's a little cheaper. And I go buy there. That's the free market. That's the invisible hand. No bullshit. And then you go buy what you want. You're the ones that making the demand. So therefore, they're the ones selling it to you because you want it. It's all perfect investment. I know somebody wants this pen, so I'm going to sell it. I'm going to charge, but then there's competition. So I can't charge 20 if it's 10 because the market that's when you then get into the market. The market bears you sell this for $3. So if you try to sell it for 10, people are going to go, no, I can buy it for 3. Why would I pay you 10? It's better. No, it's a pen. Sorry, I'm not going to do it. Now you do have your ground blanks, which are, very, almost asset type of pens for special occasions. So that would be the differentiation. And you'd pay $100 for a pen versus 3 for this pen. That you could do. Maybe if you're an executive and you got a nice office and you want to put a nice pen in there as to show the power. But that's what the market is. So you're back to the market is what people will pay for certain things. So it's if nobody buys, the clicker, if nobody wants to buy it, you can't sell it because there's no demand. That's what's happening with the dollar. If there's no demand for the dollar, it's worthless. So what they're trying to do is fake this and make it where they're blowing it up to force demand to the central bank digital currency. They'll call it a good thing. Oh, we've got the solution to all this inflation and all this. It's the central bank digital currency. And that's what they're going to try to sell you. But we know that's not the solution. It's just bullshit. Give us gold. And I want dollars, and I don't want to be with the central bank. I don't want to be with the government. So the market dictates what you sell. So if you want to be on that side, if you want to be a seller, you got to know what the competition is, what they sell it for, and how much of a market do I have. Now, where it gets interesting is we all need to eat. So that's why you see a million restaurants. And you see a million grocery stores because you can either go out and buy the food or you can go out and have somebody cook it for you at a restaurant. But we all need to eat. So there's needs and wants. I want the green shirt. I need clothes, but I don't need a polo shirt. I can have another shirt. So that becomes then price conscious and gets into all that marketing to try to get you to buy something and spend more. But it's all basic, right? So that's what you're trying to do with the Austrians is free market. Individual wants something, we make it for them. We have competition. The consumer benefits, that's Austrian economics. We as the consumer benefit from that. Keynesian is for the government, not for the individual. So when you have all these Keynesians with the stupid economic, print the money, they don't want the individual to choose. They don't want you to have competition. They want to have a monopoly that says we print the money, we do this, we do that. We want healthcare from the government. That's why Canada's failing because it's too socialist. Communism is very similar. And it's basically like if you're ever in Canada, what do you see? A liquor store. It's the Canadian liquor store. It was Canadian Bell. It's Canadian healthcare. There's no competition. It sucks, right? You want competition to give you the best. It gives you the best product because I got to make it better to compete and I want to win. So I got to have the better product to sell you. And then I got to have the good price. But if you do Keynesian and you do communism, socialism, there is no competition. They set the price wherever they want. They don't care that you buy it if you need it. So that's the problem with communism/socialism. It's government run. They don't care about the individual rights and freedoms of what you want. That's basically it in a nutshell. So when you hear Keynesian run fast, all of your financial planners, however, are Keynesians, unfortunately, which means they're going to tell you 60% stock, 40% bonds. How about gold? No. Don't get into gold. We don't want you to own gold. We want you in stocks and bonds. Again, that's the problem. That's why nobody understands gold and silver because Tom Brady doesn't know anything about investing. So he goes to his financial planner, who's probably friends of his dad or one of the guys on the team. They don't know anything. They just 60% stock, 40% bonds. How about the inflation? Well, that won't last. It'll be okay. It'll go down to 2%. They'll tell you a song and a dance to get you into it. How about gold and silver? And that's where I get, for all you people who have financial planners, ask them about gold and silver. And if they say 60-40 and, oh, gold's no good, fire them on the spot and just, you know what to do. You don't need them. You don't need to be in 60% stock and 40% bonds. Yes, it was a gimmick and it worked for a while because you had interest rates at 0%, which you don't have anymore. They're at what, 4 or 5%? I don't even care. I don't even pay attention. Oh, well, the gold price is down. That's not the physical gold. That's the paper gold. The physical gold's like 50,000, but you have to determine that price, which is what Russia's doing right now with this whole currency backed by gold. It's coming. You just have to wait, but you have to know it's coming. And you know gold is not 1,800. If it's 1,800 in paper, you think it's 1,800 in physical? No fucking way. And quit worrying about selling it when it goes up. Believe me, everybody and their mother is going to want gold and silver once they understand that's the only safe haven to be in. Once they get it, they'll be a line out the door for 20 miles to the coin store, people wanting gold and silver. Oh, what do you mean we don't have any? What do you mean it's 50,000 for the ounce? That's what's going to happen. It's not an opinion. It's not a guess. That's the expected outcome, 100%. And it has to happen because everybody's going to get wiped out. So what else can they do? I mean, except for the gold and silver people, you're going to have an asset that is in demand that you can sell for the digital currency. You'll be able to buy the digital currency with the asset. What other assets are you going to have? Your house. Do you want to really sell your house? What else do you got? Baseball cards, diamonds, and paintings. I mean, what else do you have that's an asset? An asset is something of value. So your tennis shoes are theoretically assets, but they're worth about $10. So it's not really, but an asset is anything with value. This is an asset because I have it and it's not open, and I can maybe get $60 for it on eBay, or whatever it's selling for. So this is theoretically an asset for me. This is kind of an asset, my Bellagio, but it's a $2 if I could get that for it. So because there's probably not demand for it, I probably couldn't get anything. So I have a lot of small assets, but I do have my cards and my gold and silver. And that's what's going to protect me because I'm going to need the new currency, provided they figure out how to get to the new currency. There's a big mess because you can't really stay where they are. If you stay where they are, then what are you going to do? The dollar's inflated to death. You can lie and say, oh, inflation's not really high, but when you go to the stores and buy things, it's more expensive. So I don't know. Their only real answer is to back the currency by gold and silver. If you did that, you would escape unharmed. You could keep the system running as it is. You'd have to revalue everything to gold and silver. And the U.S. would have to buy a shitload of gold and silver because they don't have any. So that's your way out. Not a digital currency. It's not going to save you because if it's not backed by gold and silver, in a year later, it'll be fucked just like this currency. What are they going to come out with a new digital currency? Or do they think they can track everybody with the digital currency? But it's not going to, how are they going to print out of it? The government wants to print money. That's why we're not on the gold standard. So if they're on money, if they want to print money because they want to buy stock or they want to do something, how are they going to print digital currency? Or do they just print it? And then what's the value of it's a fucking nightmare. Anyway, until we go back on the gold standard, we're all fucked. The only way out is gold and silver. And I'm not saying that as a gold and silver salesman. I'm saying that as your economist and the professor. That's what I've done. And I bought gold and silver. I just moved 30 grand out of my IRA that I'll move into my safe and at least protect myself until we figure out what they're doing with dollars. But I think I think gold goes up quickly, but I don't think this fiat currency, I don't know how it can just go, oh, we'll have digital currency but nobody knows what to price it, or we just leave it at the same. But I thought they wanted to get rid of it. That's why they're getting rid of the credit cards and the mortgages. So I don't see it being even money. So how does all the stores change their prices? Nobody knows what they're being charged. I mean, it's insane. Well, this will be interesting. I'll report as I learn more. That's okay, Bobby. I meant to say professor's chicks are blowing up his phone with well, it's my three girlfriends. It's my girlfriend in the Ukraine who I took to Lisbon. It's this girl in Romania who keeps wanting me to give her money, who I keep saying I don't have it because I am in the I need to keep the balance. I don't want to sell any gold and silver. So I need enough cash to pay the bills so I don't have to sell the gold and silver. So I'm extremely tight with my money now, and I can't give it to her, and she's a pain in the ass anyway. And then the other one is my friend from Alabama. He's got a gold mine. And so we're talking about, he told me about this. I told you like a month ago about we won't have to pay back our credit cards. Then I saw this video and then I sent it to him. So he's the other one. Good guy. He's in South America with a gold mine. He's one of us. He knows what's going on. But my girlfriend's the one in the Ukraine, and I got one in Russia, and then a real close friend in Romania, not this girl. Anyway, and the more the merrier. That's why why do you want to get married? Then you can't talk to three people. So it'd be like me saying, I can only have one guest in my class. I can only have one student. What the fuck? It's many that want. So if you meet girls and you like them and they like you, what's the problem here, folks? So anyway, that's that. So I'll keep you posted as I learn more. I'll probably add a little bit to football as we go. So football, I have put out one lock in college. I posted 3 other games. So basically, I like every game. So the guys I do 10-team teasers with, it's going to be 6 college, and I'll find 4 pros, I hope. My question is Georgia going to play? Or are they going to do the shit they did last year when they lay down because they were already in, they had nothing to play for, and Alabama beat them? And then they played the real Georgia team in the championship, and Alabama crushed them. Is that going to be what they're going to do with LSU? Are they going to but the fear is if they lose to LSU, they might enter Ohio State or Alabama into the playoff. I don't know that they want that. Now, they're going to have K-State, TCU. They're going to have USC or Utah. I assume they'll lose if the other team wins that they're in. And then they'll have, I assume Michigan will beat Purdue. Clemson, no way. Alabama with 2 losses. Ohio State, maybe. That's the ironic part. Because Ohio State's not in the championship, they really only have 1 loss, so they go ahead of Alabama with 2, which why did they look at losses like that? I mean, TCU to go undefeated in that conference with no weak team because Kansas all of a sudden had a football team, or in the Pac-10 when there's only 1 weak team, which is Colorado, and USC runs the table except for Utah, and Utah loses a few games because they had to play UCLA and Oregon. I mean, what the fuck? So you lose a few games doesn't mean you're a bad team. But anyway, so I have posted my college. And the pros, I pretty much studied them. I just got to make my final selections. Should be a pretty good week with that because I'm starting to get the feel for the pros now, where the first 2 weeks were preseason. So you're not seeing it. And then with all the injuries, you're really seeing the third stringers out there, which is why we don't bet the preseason, because we don't want to bet the preseason. We don't want to bet the third stringers, but that's what we have. That's why you're seeing all the inconsistency, is all these injuries, all these hamstring injuries. My God, it's insane. So that's what you have going on in the pros. So they're starting to settle in. Like Brady's got Julio Jones and Evans, although they still suck, and I assume it's the coach. Certain offensive linemen are hurt, but so what? They're hurt on every team. But I've gotten a pretty good, like the Jets. I feel comfortable. The Jets are playing Minnesota, and I feel comfortable betting the Jets in 9. Before I would have been on Minnesota and gotten killed because the Jets are a good team. Now I can say, yeah, I think the Jets can hang in there with the 9. So that's what we'll do with that. So anyway, that's what is going on. Where do I put my college? Here's my college. So that's what's going on. So those we'll talk about tomorrow. I guess we'll talk college tomorrow and the Thursday night pro game. There's no college games. There's 2 Friday, and then the rest are Saturday. Oh, they've actually moved USC Utah to Friday because it was competing with the Big Ten, and they're like, well, why compete? So that game's moved to Friday. So you can have that Friday, and then Saturday you can have your LSU Georgia and the Kansas State TCU and the Michigan Purdue, sort of like back to back to back. And then your little games like UCF Tulane and Troy, and I don't know where North Carolina Clemson's going to fit. Fresno Boise State. I like Fresno in that one with Hainer. But that's what we got to look at tomorrow. And I'll be watching the YouTube. There's a ton of, silver's about to go up and gold's about to go up. And I'm starting to see a little bit on this reset. But again, on YouTube, not enough. I'll have to figure out where to, and that's why I went to the restaurant to ask the guy, what are you doing about the reset? You're going to have to change your menu and figure out how to get payment. Because right now your machine goes to Chase and Wells Fargo, goes to the credit card companies or the banks. Well, if it's going to the central bank, how are you going to do it? Now, what they should do is leave the banks alone, and we have our accounts there, and it'll flow through. But if the central bank thinks they're going to handle 350 million people, they're out of their fucking minds. Where are you going to put that on a computer? Or how many computers? You're going to have 1,000 computers? I mean, good luck with that. So it's really unorganized. What else do you expect from the government? So any other questions on economics? And I know I only touched a little bit because we did a lot of reset. I always talk about money and what it takes to be a good country because those are critical, and we don't have those right now. That's where we need to get to. So when we get to that, then we know we're home. Also, you look for another country that has that. That's really what you're looking to move to. And in Europe, they got the euro. They're fucked up. They're all like all together. No. You should be your own country with your own currency backed by gold, with your laws and your free trade and everything else. She wants you to go back already. Back to Lisbon? Well, I would go to the Ukraine, but the airports aren't open, and I really don't want to get bombed. But she's got a girl in the Ukraine has a 21-hour train ride to go from her city to Poland. I mean, it's insane. And then to get to the airport, it was another few-hour train ride, I think, or a bus ride. And I mean, it's exhausting for her to get on the train, to get out of Ukraine, to get to the airport. Anyway, she wants to spend New Year's together, but we just went, and then with all this shit happening, I don't know what to do for currency. So anyway, any other questions, comments? So we did the trade cycle, which I thought was very important. Again, you're looking at expected outcomes. That's the key to life, with women, with men, with jobs, with betting, with stocks, with money. It's all the same. X happens. What is the expected outcome? We know it more in poker and in stocks and in football, more so than other things, but it's all over. It's in everything, and that's what you want to know. Any other questions, comments on economics? There's a subject you want me to talk in economics, we can talk. We did talk Keynesian. We can talk a little bit more, but let me know. Again, www.teaserking.com. You can get my email there, or if you're going to buy the football package, you probably have till, well, Thursday, the pro game. Phil, what are your thoughts on silver gold mining stocks? I have shares of FTM Fortuna Silver Mines. Bobby, thank you, Bobby. Phil, my thoughts is they may go up quicker than physical, and it's not magic paper, silver, or anything. Bobby, December is definitely going to be a month to stack metals. Well, yeah, because you got to buy them now before they go up. Now, back to your question, Phil. Here's how I understand gold stocks. Gold stock, I have Newmont Mining when I have stock, but basically I'm out. NEM, and it's only at 45. It was 80. The way they value the gold stocks is with is with inventory. So every company has their value, right? Sales were X, cost of goods was Y, we made profit. What we're doing is selling our inventory to make sales. So if you're an ice cream, if you're Dairy Queen, your inventory is ice cream and sprinkles and cups. And as you're using it, you're charging $5 for an ice cream and it's costing you $3 for an ice cream. So you're selling your inventory to which turns into sales, and then all the cost to buy the ice cream and everything else. So why am I talking about that? Well, what's a gold mine? What's their inventory? Gold. They have ounces and ounces of gold. Well, what's the price of the gold? For some reason, they're using whatchamacallit? They're using COMEX. Why are they using COMEX? So they're using the paper gold price of 1,700 to value the gold in the mine. Well, what have we been talking about? We know the gold price is going to be much higher. It's going to be 50,000. So the gold mine, now their inventory of a bunch of ounces at 1,700 is now a bunch of ounces at 50,000. Okay, so our inventory just shot up 50 times. Our earnings now, when we sell the gold, I don't know what they're doing with it, because if they are digging it out of the ground, they're selling it to a middleman who turns it into coins or jewelry. They're not doing it, but now it's more expensive. They just made a shitload of money because their costs stayed the same, but their inventory jumped 50 times or 25 times. So what should happen to the gold stock? Well, the gold stock should go through the roof because earnings just went from 10 million to 100 million. They're billion-dollar earnings in Newmont, but Newmont's the biggest gold mine in the world, so that's why I'm in it. So, well, I was in it. Now I'm in cash, but now their stock price has been dropping. So you're in for a ride, Phil, because what initially happens, people sell everything so you got money in Apple, and as nobody can afford a $1,300 iPhone, Apple starts losing money. You're in it maybe with margin, which is a percentage, right? So you got to pay the margin off. You're losing. You need to pay your rent. You need your food, da-da-da-da-da. You want to sell your assets, right? So what are you going to do? You're going to sell your Apple, okay, to get money. But what am my Apple drop? Oh, I own Newmont Mining, a gold stock. I'm going to sell that too because I need money. So all the stocks get sold initially because they're selling because they need money. They're not selling because the company's doing bad. The ones that are doing bad is causing them to need money, but the Newmont isn't doing bad, but you need money to pay off the other shit. So you're selling your Newmont. So Newmont gets caught in the crux it's 45 an ounce. Maybe it goes down to 35 an ounce. But once they revalue gold and it's now 50,000 an ounce, where does everybody run to? The gold stock, because now they're going to run to the gold, but they're going to run to the gold stock because you know what? That's going to be, let's say it's down to 35 an ounce. What do you think happens when it hits 50,000 an ounce and all of a sudden their inventory goes up 25 times? That stock goes boom. So the 35 goes to 300-400 a share. So you've got to be able to understand the $35 drop is not because there's nothing wrong with the company. People need money. And not a lot of people are in these gold stocks anyway. So it won't get hurt too bad, but it will get hurt because it's across the board selling to get money, to get liquid. So once that happens, boom, and then it's revalued at the new gold price, and the value of the stock's through the roof, just like gold. So you can buy the gold, but that'll move faster. It's better to be in the coin. But for your question, you're going to make a fortune in it because the values of the gold and silver is going to go up, and that's going to drive the mine up. And there's not a lot of silver mines because it's not profitable, because you only can get $25 or $20 for an ounce, and it costs them more to dig the ounce out of the ground. That's why silver's very short, and gold, you'll still dig gold because you can still make profit on it. But again, that's at 1,800. When it hits 50,000, just do the math. So that's why I sit in gold stocks, and I made a ton in gold stocks. Now keep in mind, in gold stocks, from 9:30 to 10, every gold stock and gold drops because it's price fixed until it won't be price fixed. And then at 10 o'clock, it goes up. So you wait till 10 o'clock to buy, and you get out by 3:30. And you do that every day, and you make a fortune. Because you buy like 1,000 shares, it goes up $1, you made $1,000, you say thank you. And you keep doing that over and over and over, and you make a lot of money. So that's what you do. But all the other stocks, not only are their earnings going to be hit by the inflation, but people will need the money. So it's a double hit. People need the money. The bonds are going to go out, and the money's going to go out, apparently. So those two things are where people are storing their money, aren't going to be there, which leads you to the stocks, which are going to get attacked. So that leads you back to gold and silver, but the gold and silver stocks should then do well. So that's my thought on it. December is a month of, yeah. What do I like the game over. They played an 80 at 66, or at least it was yesterday. I guess if I had to bet it, I would take Utah plus the 8.5. I see 2.5, 66.5. So my bet on the game's over because you got two extremely high scoring teams. And every time the two type of teams, UCLA, these two, Oregon and Washington, played, it was over, except for the Oregon-Utah game where the quarterback was hurt. So when the quarterback's been healthy, and they both are here, these are extremely high-scoring games because neither team really's got a defense. I mean, look at Notre Dame. They played a 70 last week with Notre Dame. 38-27, a 65 with Notre Dame. What do you think's going to happen with Utah and Rising? They have a real quarterback at Utah, not at Notre Dame. So I like that. I like the game over, and I probably like Utah as the dog because this is going to be a close game. Phil, okay, I understand, Professor. Thank you. Enjoyed the class a lot today. Oh, thank you, Phil. I appreciate that. Yeah, I mean, that's the logic, right? Stocks go up when earnings go up, and if your inventory goes up 25 times, the value of your company goes up, the earnings are way up, and your costs haven't gone up at all because the value of the gold, you dig out the inventory, so you have digging costs. Well, that didn't change, and you have salaries, and you have taxes and all the other stuff. But none of that changes. The only thing that changes is inventory going from I don't even think, I think it's like 1,300 on their books to 50,000. Now the question's going to be, what happens with the digital currency? How are they going to value everything? Because everything changes, right? So this is going to be extremely, extremely challenging to. If you think you're just going to change the dollar, okay, we're out of fiat, we're into the digital currency to get rid of the debt. And by the way, well, you won't have to pay your mortgage and credit cards or your car payments. So again, okay, fine, but you've got 1,000 other things here going on in motion. How do these companies? What's the value of the stock? Does it stay? If it goes from 40 to 150, does it stay at 150? Does it go to 70 or 100 because now it's in the new currency? If I sell it, do I get the digital currency, or am I still in US dollars where it's worthless? These are really crazy what they're doing. I don't, no, I'm sure I'm missing pieces of the puzzle, but I doubt they've thought it through. So this will be curious. I should call my professor at Walsh where I went to college. If he's still, I doubt he's still there because that was in 1995. So it's been 30 years. Oh my God. Anyway, I think that's about it. I'm kind of need to eat. But tomorrow we'll talk college. If there's more economics, I'll share that other 8-minute video with you. I don't want to pile too much on, and then we'll go from there. It's funny, in college, you can only sit for like an hour and absorb, and then you get tired, and that's it. But for some reason, we can go 3 hours here. Not everybody's interested, and there's no problem. So anyway, so have a wonderful day. Be aware this is all happening, and you better be thinking how you're going to survive it. I'm giving you the gold and silver out, provided you can get gold and silver, which is why I'm screaming to buy it now, because once you wait, you're not either going to find it or you're going to be paying a whole lot more for it, which you don't have the money for. Now everything's still okay. I can go buy it, and I might go buy another 10, 20 ounces of silver. Well, thank you, Brandon. I enjoy teaching it. I feel bad that most of people don't understand what's happening to them. And I want to do my share to help people understand and protect themselves. So I don't like that nobody knows something that I know. So I want to make sure they know it. And I don't want to charge a penny because this is vital information. You buying gold and silver and saving yourself is my payment. And that's what I'm trying to do. So keep that in mind. We'll do more economics because football got a whole lot lighter with college. I mean, tomorrow I'm going to talk about 10 games, not 70. We'll still talk, but we'll get the bowls, I guess, next week. And then we'll start talking about the bowls. Pro, we're figuring it out. So I'll do pros Friday, I think. I'll do the Buffalo game tomorrow. I've looked at it, and Buffalo owns New England, except for that real windy, rainy day in Buffalo when New England ran it 800 times and they won like 10-6. But in the normal weather games, this has been all Buffalo. So we have to figure that out. Anyway, I'm starving. I'm going to eat the barbecue that I bought yesterday. I got a ribs chicken combination. And so I only eat like half of it, and then now I eat the other half. I've noticed on this diet, Bobby, you tend to be less hungry. And like now I haven't eaten all day. So I'm going to have pita bread and my chicken and my ribs and my water and choke a bunch. But that's what I'm doing because I'm just not as hungry. And anyway, so we'll go from there. Good luck. Please ask me questions. I'm waiting. I want to educate, so I want the questions. So I do it live. www.teaserking.com. It's on when I enter the thing. So at the bottom of the video, if you're in on your YouTube, it'll give you my my website, and then in the website on the homepage is my email. And please feel free to email me. Like I said, I check that all the time, but I can't check here. So anyway, we'll do college tomorrow. We'll do some more economics, I'm sure. And everybody have a great day. Good luck. Be safe. Be careful. And you're educated. Go buy some silver, at least right now, because your dollar is getting fucked. And if you have a lot of money, you're really fucked. So maybe 20, 30,000, they'll let you switch to the other, but I don't even know about that. My money's in the safe. So if the bank says we don't have money, I'm not totally screwed. And then exchanging the money for the new money if that happens. So we will see. All right, everybody. Thank you. Have a great day. www.teaserking.com. College is posted. The locks are posted. We'll post the pros probably tomorrow. What's today? Wednesday? Yeah, probably tomorrow. All right, everybody. Thank you very much.